Okay, I figured it out, I think. Let me get back to where I can see what's going on. Is that better? We have audio now. You guys can hear? Okay. My audio filter thing just like shut off. I don't know. Craziness. All right, we're back to normal. We're up and running. Okay. All right, so what's going on right now? Let's do this again, but with some sound. It's going to work better, I swear. So I remember my buttons. Okay. All right, so right here off the open, you see that? We popped up. Let me see, is this okay? All right, right off the open, we popped up. We got you see that? Just a little bit of red right there. Now, orders right off the open, I always take with a little grain of salt and Red Bull because it's right off the open. And that always makes me, yeah. So I take those a little less impact. Anyway, so it pushes back down and we see that that positive number immediately turns into a negative number. And you can see right here that convinced a bunch of people to click the sell button and it turned green. So we've trapped in some sellers. We have sellers right there. Now what we're going to do is look at velocity and say, hey, is this liquidity effective? That's going to be the most important thing, is if it's effective. I'm going to zoom in just a little bit so we can get a look right there. You can see that I'm like messing with these buttons here. Tension hasn't really moved up. You know, if it was like moving down and then we get that and it popped up, you know, we want to see like a little move up like that. That tells you that the players who bought in against the liquidity, this liquidity here, which was triggered because people saw negative numbers, see negative numbers, and they freak out, that they're impacting tension. Now, you can see right here that decay has moved positive. We're getting a bunch of little signals going off here. And it took it a little while, finally moved up positive, and you can see it searched, and now it's filling against buy orders. So this positive energy that's coming into velocity is now triggering people to click the buy button because, oh my gosh, there's energy coming into the velocity number. I know positive numbers mean up. So they're putting their faith in positive numbers, and that's why this is turning red. So we're getting that some bearish liquidity being presented to bears. You can see that the bulls have not really impacted tension. If you sort of think about it, that right here, these guys are sort of waiting to see. The gameplay here is, well, we want to make sure we have somebody on the back side of this trade. You don't just want to like jump in, and you need an opponent. And so right now what the market's doing is says, okay, we got the bulls kind of sitting here waiting, and you can tell they're waiting because we haven't really seen much go on with tension. And so the question is, are we going to get some bears to come in here, and will the bulls, you know, turn them over and drive this up and we'll liquidate the bears and the market's going to be good? Or is the gameplay here to let this kind of move down to zero and we see daily tension and 30-minute tension get to zero and we see some bullish opportunity to defend probabilities? I think that the defending probabilities looks pretty good because that's going to provide a good trade. You know, we see this kind of thing all the time. But if we can trap in some bears right here, a couple of bearish players come in, they try and consume that liquidity. They're not in control of probabilities. They need that nod from the bulls. The bulls got to say, yeah, sure, go ahead. Don't worry about it. Take tension down. If they don't have that nod, then they're putting themselves at risk of getting liquidated. They're putting themselves at risk of filling their order here, and the market grinding up till it goes bam, and you see that bam, pop, and we'll see tension curl. That's what they're putting themselves at risk doing, trying to consume this liquidity before the bulls let them know it's okay. If you don't get them stepping out of the way, well, you're just eager. And this is the group that I would call eager. I'd say they're very eager. And if there was some bears that popped in right off the open here, they would also be eager because they jumped in too early, but you know, maybe they dumped already. It was just a scalp, you know, it was right off the open. That's why I'm like, ew. Liquidity off the open. So I think this is between these two players right here. We have the bears trying to consume this liquidity, and you can see orders left 56. We're still at 56%, and this is so it's got a little while before they're going to finish consuming this liquidity. That can change quickly. You have to keep your eyes on that. So what's going to be important coming up next? Because everything we just talked about really doesn't matter unless you can use it to extrapolate some reliable future. So we're going to be looking here. And if the bears step in and they decide they want to consume this liquidity up and they're like, oh yeah, we got this. We totally won yesterday, and they're very motivated. And that's what I think they're feeling. Because if you remember yesterday, the bears cheated. I'm not going to go over how that all works, but they sort of cheated. The bulls came in, had a good opportunity. I think everything's lined up. The bulls just went quiet. And I think the bears got pumped. They're like, yeah, we cheated. We're winning. We're winning. We're winning. We're doing so great. But if you look at tension, you'll see that, oh man, is that like the undo button? I think I found the undo button. Okay. The bears didn't get daily tension under 0. They got tension to move down. I mean, really just burned through some tension and gave the upside more room. So the bears, in all their success, didn't really succeed. They didn't get things where they needed it to be to get this to go. Does it mean that the bears are going to fail today? No, it just means that right now the bears are probably feeling pretty good because the bulls didn't do anything. And that's not the same as winning. That's just not. All right, so you can see the paint here will start to try and lead to give you an idea. This will go a little bit faster, but pay attention to this number here. So 30%, we still got a little ways to go. So what's happening is these bulls are sitting in a pretty good spot. You can see that, right? They're sitting in a pretty good spot. They're watching these bears fill. They're thinking to themselves, okay, these guys get in. We're going to have them in. Do we want to drive it against them? Do we want to not? Why would the bulls want to drive the market against the bears? Because if bears liquidate, real bears, I'm not talking about sellers, okay? There's a big difference. If you're clicking sell and you're done with your order, you are not a bear. You need to click sell and then go fill across the entire market with 7, 8, 9 figures of money, like millions. If you're not using that kind of capital, you're not a bear. You're a shadow trader. You chase players. So we're looking for bears. Now, bears have to unwind after this. The bulls would be able to turn tension up. You see tension right here? They'd be able to turn tension up. And hopefully, the bears are really dedicated to whatever it is that got them to sell, and we can really get price to rally for a while before they finally unwind. That would be the upside. For the downside, if the bears jump in here, okay, so you see that? It's done. You see that? It's gone. So the bearish liquidity is finished. It's in, and now we need to find out if the bears are going to hit. This is where the risk comes in because the bulls are holding right here, and they want to see if these got what they're going to do. And if the bears push, we put some capital into this, then we'll be able to see that here. We'll also be able to see that in price sweep down. So it's 29.38. We see sweep down to like 29.34 or something like that. And then you'd say, oh, there's the bears. They're trying to hit this. They're trying to come in. And then the bulls would say, we didn't tell you that was okay. And that might be a bad thing. So I think the best thing that the bears could do is be very light and gentle with their orders. So I don't think Matt's in the live stream, but somebody should tell him don't use order flow on ThinkOrSwim. So that's where we're at right now. Are these, and you could see, we're at 29.40. It's looking like these bears are aware of the predicament they're in. So the bulls, now this is turning into what I think it would be eager bears. I mean, the liquidity showed up. We're seeing tension kind of moving down. So I'm guessing what's happening here is that some bears came in, and this is a guess because it's going to help me build out what's going to happen as I see those things validate the guess, educated guess, whatever you want to call it. I'll be able to know what's happening. So now as these guys are getting finished up here, we're still at about 38. They haven't quite hit, and a hit would sort of look like that. would sweep down. The reason I look for a sweep, it's not because it breaks trend lines and stuff. It's because when you inject capital, money, cold hard money into a market, it moves price. It doesn't usually move the internals or the structure. It's just when you put money into something and you have real money, it'll, move. And so you look for this little pop, and that pop's going to tell you that real money got into there. And then you look at tension, because when you're a big player, you impact all the stocks in the market. So you want to look for both. Usually the sweep happens at roughly the same time as this, because they're getting into these positions with options and warrants and all sorts of swaps and things to get the best advantage. So that's why I would look for that. Otherwise, I think what's going to be happening is we're going to be using yesterday's levels, which is, I think, this pivot here, right there. That was the one I was watching yesterday for the upside. So if the bears are going to try and jump in, and I would absolutely think that this right here these are shadow bears, or they're eager. And I say eager because they didn't get the nod from the bulls. So they're like, we can do this. We don't need to wait for the bulls to let us know. We don't need to wait for the controlling party to let us know. Okay, so we're getting a pop down. So you can see this come down a little bit, and the bulls are watching. Okay, so look at the problem that these bears immediately are in. Can you spot it? Look at tension. So how far down do these bears expect to drive this? I mean, what are we going to see, like a 29.20? Is that where we're going to go? Because 29.20 would absolutely mean tension needs to push through zero. So if that's where we're headed, then they're going to need to get through zero. And that means that these bulls need to get toppled. And as far as I'm concerned, the bulls are still in control, and they're going to be able to manipulate this the way that they want it to go until that the bears can somehow get their foot in the door in the way that they want it. Until tension moves under zero, and daily tensions, you can see, are 30 minutes. So the reason that these are a little bit different is because this is a smoothed, sort of. It's not really smooth, but it'll go behind this. So you look for this for when you're going across. So really, 30-minute tension is popped under. So what are we seeing right now? We're seeing the bears have jumped in and they're giving this a try. Okay, they're eager. So there it is. They popped up. They got here. The morning right there. You see that? So we got a little bit, 2 piles of bears. The first one, we're gonna say maybe a half a pile of bears. The second set's more valid to me. But there's 2 piles here. There's 2 little groups that you can look at. And their entire objective is to get 30-minute tension under zero. Because if you don't control the probabilities, you're going to get folded over and you're going to pay for the move. So if they can't get this 30-minute tension under zero right now, over the next few minutes, they're going to have trouble. Well, you can see there's sell orders filling, right? What is this tracking? That's tracking people clicking the sell button. And my assumption would be sell button's happening because we saw 30-minute tension poke under zero. The probability started to shift down and people saw the negative number. And they went, oh, I know negative numbers mean down. And so they click the sell button. So that's how it works. I know negative means down, so you click the sell button. And then it shows up here. And so we can say, okay, we're going to draw a correlation here. And we're going to say that move under zero led to this volume here. And that's how we're going to look at this. And you can see it already moved back up. And we got to wait a couple minutes, not a couple minutes, but a little bit to really get a verification that they have popped this back up. But what's important is that you understand that these bulls are patiently waiting to see if these bears are going to fail. And that's what they're doing. If the bears are successful and can push it down, they would need the bulls to step out of the way. And I think that's why tension, you see it a little bit, it popped up just like a little bit there. I don't know how many you guys can see that really well. I'm going to zoom in so you can get it. I don't usually zoom in on charts because I think it's a bad idea, but you can see it sort of popped up a little bit. So the bulls sort of positioned, and I think they're in like a waiting. They're just waiting. That's all we got to do is just wait a little bit. And so seeing tension popped down under there. These bulls are just sitting here waiting, and they're looking at these guys, and they got the question mark. Okay, what are you guys going to do? You're going to get in? You're going to not get in? What are you doing? And so we saw it pop down under. There's orders filling here. And to me, this is looking like the bulls are going to start trying to defend the probabilities that gives them the control that they have. I'm going to be looking at this daily tension. I think the daily tension is something to pay attention to. It's going to be a big deal, because if the bears can get some sort of news event or they can get a big push, usually this is the time to do it. It's the time to go pull those levers, because you need both of these to go under. And if they can both go under, we'll get a trend cap. A trend cap is when you get both flipping over at the same time in a decent way. So they can get this under, and we see daily down and 30-minute down, then we'll have a trend cap. And what a trend cap does is it will cap off all the major bullish control that's gone over for the past couple days or so. And that'll be a big deal for the bears. And the bulls are going to be sore about it. So if you're going to run an algorithm, if I were across the market trying to be bearish, this is the time to do it. Because if you can get all these numbers under, you can get those bulls to surrender and unwind on the wrong side, upside down, unwind. This is the time to do it. So I think over the next few minutes, we're going to see a little bit more aggressive pricing. Things will start moving as these institutional players start wrestling over the probabilities. But it's important that you keep these guys in mind. There really are two groups right here in the open that are looking at trying to get control of this. Now, to reiterate, what do the bulls want right here? They want to fold over the bears, but they got to do it the right way. So you see 30-minute, our daily is getting to 0. And if we can see the bulls defend probabilities here, pop it back up, we have these guys who would probably not liquidate until up here. So let's see right away. Up here, I don't know, get maybe up 29 is where I think that they would liquidate if they're going to liquidate at. That's what the bulls want. The bears, right now, what they're looking to get is to see this bearish liquidity come down. If they can get these guys to liquidate down here, so I'll draw this up here. So down here, let's see, what's that? 29, 27, we'll say. I think you get about there. I think the bulls who were waiting for a little bit earlier would start to unwind, just see that pop down. And that would be a big deal for the bears, because popping those bulls out would cause tension to curl down. It would get more aggressive, it would accelerate it. And that would help push everything down through. So we have these two face to face. This is a situation where I think of them as face to face. They are staring each other down. So we have these sell orders are still filling. And you can see we're just a little bit through on 30-minute. The daily is still at 0. I don't think that the bulls from earlier right here would really let go as this tests. I think what they're going to want to do is see that test happen, see the sell orders finish up, and then they'll say, okay, let's consider what we're going to do as soon as we get to that point where that we want to defend the probabilities, defend this 30 and daily. The dangerous thing that's happening is that these bears put themselves out there. So their risk was kind of high, right? A little bit higher risk because they didn't get the nod from the bulls. The bulls are in a waiting pattern, and that waiting pattern is starting to reach down to where the bulls are getting some pressure. And you can see that. And you can see it, right? If you were sitting long, you're feeling it. At 29.34, you're feeling it. You're not happy about this at all. So the bulls are feeling some pressure. The bears are gonna need to roll up their sleeves and hit this hard. If they don't, the probabilities are likely going to just bounce. I mean, that's what happens. You see, when daily gets to 0, the bulls come in and they're able to impact. It's just what happens because they have control of probabilities. They can use those to roll you over. So these bears are going to have to really get a nice crack on the back, or they're going to be stuck in a pickle. So what I'm looking for is conflict. Right now what's going on is we're building sort of a simple dialogue or a narrative between these two players so you can understand where they are in emotionally and where they are in their heads. And then once we can figure out how that's going, we can start to look at the decisions they're making. And so if we see the bears come in and take a hit and we see this come down, they start trying to get things down to 29, 27, where they think the bulls might even liquidate, then we can start to look and say, we know what those bears were doing. And the bulls, they thought they had everything right off the open. So we start to be able to get this like social dynamic between the players. And once we get enough conflict in there, it starts to become pretty clear what's going to happen. And right now, we don't have a whole lot of conflict. We have a little bit. The bulls come in. They effectively were just waiting. So essentially, the bulls failed to impact tension. This is a failure. But because it was so close to zero, I'm sitting here thinking, well, just wait. And so I think that the bulls would just wait until that comes down and tension test zero. So we got this. I should turn it to a decimal, I know, but you can think of this as positive. So daily tension has moved down under zero. So we're getting to that point where the bulls are starting to feel that pressure. From price, sure, yeah, 31. But from a control standpoint, this is where the bulls are starting to be face to face with the fact that if they don't act soon, the bears are going to step in. Now, yesterday, the bulls did nothing into the close. And I don't have a really good reason for why they did it. I think they had a pretty decent setup. There was a lot of noise in yesterday, and I think that what happened was through the morning, the bears did some stuff that nobody liked. And then everybody was like, well, if you guys are going to cheat, we're not going to play. And so nobody was here into the close of the day. And so I think today what's happening is you got to pick up the pieces. So right now we're seeing the impact of doing nothing because you're so upset. Oh, these such whiny hedge fund managers. So if they don't do anything, they're going to lose control of probabilities, and that is going to be a problem for the bulls. Well, what'll happen? This is how it'll play out. Okay, so if these bulls lose control, so these guys right here, they sit, they do nothing, they decide to hold. The longer that they hold and don't unwind, if these both push through pretty good, and the bears really just, which we'll see. This is a buy signal, by the way. I just want to make this clear. Getting these coming down and both testing zero, this is a buy signal. And the thing we're waiting for, oh, there it goes. So okay, so they're gone. And there's a little bit of lag here, 13. Oh, we're actually doing pretty good, but I think it just updated. So there we go. So we've got that. The sell orders finished. So sell orders came in and now they turn. So here you go, bulls. You guys want this? And the reason that I would call this liquidity is because there was negative numbers showing up. Well, it's positive, but it was crossing over zero here and creating, the downward force pushes the number down. The upward force is the counter tension. That's this. So they saw that number move under zero, executed. So we have liquidity being presented to the bulls. This is a very, very, very important moment right here for the bulls. The bears have their position here. They're feeling pretty good. There's a bit of one here. They have a little something from here from yesterday. There's a couple of things, but I think this section here, we'll just look at that one. Now, so you can see the bears they're feeling pretty good. If these bulls pick this up right now, what we're going to see is the bulls start looking at how we liquidate all these positions in the most effective way. If the bulls do nothing, the bears are going to take that as a signal. Go ahead. And I think that if the bears get that signal, they're gonna run with it, just like they did yesterday. We saw a little bit ago, a couple days ago, we saw some big hits that were short-term effective. So I think the bears think, they can impact the market. So that's what we're looking at. We have a pretty decent dynamic. And now what's going to happen is over the next couple minutes, we're going to start moving into medium complexity, which is pretty quick. I mean, market hasn't been open for an hour and we're already up to medium. This is a lot of activity. Usually we get a couple of little things going on. Okay, here we go. So we're getting down to 29, 28. So the bears are feeling like the bulls have moved. And that is what just happened. So it's dipping down. We need to keep our eyes right here on tension. Give this a second. It had a little, there we go. You can see we're at +2 here, so we're already under 0. The bears are thinking that they got this, and the bulls are underwater. Even their excellent position that I thought from yesterday was a pretty good spot is underwater. So these bulls are terrible. They're doing a horrible job. They didn't do anything yesterday, which they just basically let the bears take this down. And the bears, I think, are feeling real good about themselves. So what's going to come up next? What do they want? I don't think the motivations have changed a whole lot. The bears still want to liquidate these bulls now. We're getting to the point where these guys are thirsty. They're like, oh, we get this down here. We'll see you liquidate. So we're going to keep our eyes here. Notice something interesting about velocity here. Usually this number doesn't do this kind of stuff. Typically you see it open at a level, and it doesn't continue to advance. So we're seeing this. So what you can do is you can look at this and say, you can make all sorts of interpretations. You can say, oh, it means this or it means that. What I can tell you is that it's not typical. And that until this situation, which is that the velocity number has continued to get further and further and further from 0. It's 67. Until this slows down and we see tension maybe do something like this. Until that happens, that we're going to see the bears emboldened. But, and here's the kicker. +2 and +1 do not mean that the bulls have lost. It's going to have to be much, much, much more aggressive than what we just saw. That was absolutely not enough to take this out. I mean, we need to see daily tension get to, well, up here, like positive maybe 3 or 4. And this is going to have to get to like +30 or something. Pushing down right now just looks good for buying for the bulls. So these bears have just gotten emboldened. So we can track that, right? We went from sort of a nervous, maybe eager, right? And then as it pushed down and they're like, oh my gosh, we got these guys underwater. Now they are emboldened, scribbly. You know what it says, emboldened. They're like, yes, we can do this. Now, what's important is that we get players emotionally in a position that gets them to scoot that stop away. The most important thing that you can do, I don't know why I'm saying this to you, if you were a market maker or an institution, that's what I'm talking to. The most important thing you can do is to get your opponent to feel hope, because hope numbs you to risk. So you don't feel that pain anymore. You say, I'm not liable for the risk because I have hope. And then you say, I don't feel the pain. And then you move your stop out of the way because you just offset the liability to someone else. Whoever that is, the universe, doesn't matter. And then that makes you easy to catalyze into apathy, which you guys hear me talk about this. So getting emboldened is not a super good look here, but we'll see. So I think this could have a pretty decent case because these guys, I think, right through here should have ripped the market up. And then seeing this here, and we have the bears come in, they could have absolutely ripped the market up. They could have. The numbers were there. Everything was there. We're all set up. I don't like seeing the bulls struggle so much, but they have pretty actively defended tension. We can scroll back. I mean, you could see that every time it got down, sure, it was messy, but they did show up. So it's not as though they're not active and they're not here, they're not interested. It's just that for some reason, they're not really looking to pick up liquidity as aggressively. They're looking to just maintain their control over tension, which seems like an expensive endeavor, but that's where we're at. I think these bears are emotionally positioning themselves to become apathetic. And I think that the bears are emotionally positioning themselves to scoot their stop way up to like 2,900. And that's exactly where we want those stops at. If you're bullish, if you're bearish, I think you're a little early. You could try and get in here. You could, but your risk is a lot higher because what you're going to be trying to do is make a bet on something that you haven't seen data for. There's no data points to suggest the bears are winning. There's data points that suggest the bears are emboldened, and that's a hope feature. And so for me, I'm sitting here going, well, I see the bulls just waiting, and maybe they just didn't see the bears in the right emotional state. So in my opinion, this is a buy thing. Like we're looking at this as a place for the bulls to say, whoa, and they start injecting their money in. So when you fill an order, you're like, oh, I won, right? You didn't win. What happened was an institution came in and they put money in the market, and that money went into the market and then into your account. And so you reduced the profits of an institution. That's where the money's coming from. It's not a loser in this case. If you buy here, if you're going long here, which is a pretty good spot, if you're going long here, you're going to be collecting from an institution, which is kind of a good thing because if they lose, you lose. And that's a great place to be, where that, keep doing your thing, because if you lose, I lose. You win, I win. So what we want to do now, in my opinion, is get these guys here, these little bears here who tried to push us through. I say little, not jokingly, but to say that they haven't had that aggressive impact I think they needed. Remember, I was like, to get this through all the way down there, they would need they didn't need a news event. They would need a news event. And the reason for that is because the size of the move would have to be aggressive. And big players don't like to show that it's not news that moves. They don't like people to know that it's money that moves markets. So you need a news event that's going to look about the same size as the amount of cash they'd have to dump in there. So if they can't correlate a news event to kind of take credit for that impact that institutions have, they're going to have a hard time doing it. I don't know. It's almost like a trader's code. You can't just shove markets around. You got to have a news event. And right now, this is looking like the bulls are not as pathetic as these bears may have been thinking. That's a good thing because now we're starting to see some conflict. This is how we're getting do you see the conflict? The conflict is that these guys are starting to know they're right. They're dealing with that one thing so difficult. Knowledge. I know. So once you know, you can stop worrying about that. You can just hope. And so these guys here are getting positioned for that. And the bulls who didn't liquidate, this has moved down, but like I was saying this morning, let that move down to zero, pick it up there, curl it up. We could trap in some bears. You'll have someone on the backside to pay. You got a good price. And then what the bulls are going to need to do is carefully convert those bears, these guys here, potentially these guys here, convert them into apathy. You have to move slow. If you move too quickly, what happens is that the bears are sitting there in a trade and they're like, yeah, we're winning. Wait, this isn't working. It's oh my gosh, it's not working. Oh, I was being emotional, and they dump it. So what you need to do is to take your time, make sure there's some sideways, pop down, something that really helps them feel like they're right. And then slowly move and then never come back. And then you get this point where it never comes back. There's no down tick, not really. It might down tick, but they know you're not going to cover anyway. So it's fine. You can down tick about as much as you need to, as long as they don't cover. You don't want to lose the guy paying the bills. So right now, what I'm seeing, this is bullish. We're going to head up. The bulls need to get hit. So big fat, this has to happen. You've been following along, hopefully, and you're seeing what's happening. So I think it's a fair argument to say if tension doesn't at least stop declining, that's a big problem for the bulls. They start trying to hit this and then tension goes like this and down. Sure, if price goes like this, it's like, wait a second, but now the bears have control. And isn't this a higher price? Bears are going to want the nice high price. So maybe overnight, shoot it up, and then that's not good either. So we need to, for the bulls, we need to see these bears get liquidated in a way such that tension does not decline. It would be great to see tension curl up like that, see prices go something like this. and move to wherever that they're going to go after. But that's really important. You can't just move price. As an institution, price is not enough. You need to move the whole ship, not just little waves in equities and stuff. So that's where we're at. So right now, what I think is important is that if you believe that these bulls were sitting here, if you believe that they were intending to defend tension, then you will see that this is a good opportunity for the bulls to try and turn those bears inside out. And the best way to do that is slowly. This is a situation where I start flipping over. I got to pull up my other charts, and I start looking for inversions, because if they're going to get things going, and I'm going to I would have to pull up a new chart because I didn't have it open. I'll just bring up the 2. I don't need everything. Okay, so this is where I start looking for inversions, and really what I'm looking for is market internals confirming that the bulls are trying to convert those bears into money, profits. We want them to liquidate higher. So if you think about what that means, you want the market to do the work. Okay, this is a big deal. If you buy into the market and you continually have to buy all the way up, your average position goes way up. Your risk didn't get a whole lot better. You want us to buy into the market and then just step back and let the market do all the work. So what that means is that if you buy into lows, you need sellers all the way up. That's what that means. And so you can look at your market internals once you say, I think bulls are here right now. And you want your market internals to stop moving up, because that means the sellers are doing the work for you. So that's the phase we're at. And this is loading that chart. So that's the spot where I start going, oh, hey, let's look for inversions. Let's see if we can see the bulls having the impact that we're looking for. So we're right now, if you're trying to keep track of the complexity, we are at medium complexity. We have conflict, and the only way to understand what's going on is to understand what has gone on. Where this morning it was just looking for signals, starting to build a narrative, and then we started to see what was going on, what was motivating people, and now we're at this point where it's like, oh, I see. So medium complexity means you need to know what happened in order to see what's going on. High complexity means that you need to know what happened today and likely yesterday in order to have any idea what's going on. I think that you could probably figure this out just without looking at yesterday. So right now, that's where I think it's at. So we're sitting here, 29.36. I think the market needs to carefully make its move. If these bulls came in with a news event type thing and shot it up, the bears would dump just immediately. The most common way to get a trader to move from hope to apathy. So my chart's loaded. I'm rescaling them so I can show you guys what's happening with that. Oh, it's not looking too bad. So is to give them one little bar that, so this is for the sellers. So the sellers are here. Give them one little pop down. It just has to be a point. It's just a point. The whole point is that you see something that validates you. And you're like, oh, my hope is real. And then you just give up. But as humans just give up. I don't know why we do. We just give up. So it's something I'd like to see. It's not required. It's just a typical characteristic of markets once you get to a point of conflict and you're trying to make this work. Now, we've talked a lot about the bulls, and I think that the bulls are in control here. They're trying to get tension back up. They have somebody to pay for that. We have the bears. I'm over here talking with my hands and you're talking with my charts. We have these bears. So they've got somebody to pay for it. We slowly move this up. We're going to see tension start to curl. And you can even see right now that it's already started. You see that? You see how tension has already kind of stopped there? Okay, so my inversion chart is up and I want to show you that. So this is looking pretty good so far. So right here, we pushed up to a new high. So there's the new high, and you see it marked right there. And what I want to see is price get over that, retest it, and not to see tick, because remember, we want the market to do the work. So we want to see sellers keep this down while price rises. That tells you that you found someone to do the work. You want them to do the work. Get it up. You just sit back and enjoy the fruits of their labor. So we've got ourselves in a spot where we could see some inversions coming in right now. The bulls, you guys got to take it slow. You go too fast. If they go too fast and we see, clear that. And we see tension, you see it's doing this. If we see tension just really curl up quick, and we're about here or so, and price just goes whap, then what's happening is the bears are realizing what's going on, and they're starting to unwind as quickly as they can. And that's not really what we want. What we want is for the bears to go, oh no, everything's fine. It's all good. I'm right. I know what's going on. I'm a god. And just move the stop out of the way. I don't feel the pain. It's fine. That's what we want, that attitude from them. You see, these guys have just been patient. They were able to pick up some extra in attempting to defend probabilities. So if you're in a position here and you're saying, I want to take advantage of these bears the way that the bulls are right now, then you need to consider is, how is this going to happen? Because the next problem you're going to face is not going to be conceptual. The next problem you're about to face is, do you actually think this is what's going on? Because at some point, the market's going to give you some big downward arrow that looks like this to you, because you're in a position, the arrow is actually something like this, but like that. But it looks like this because you're in a position when you're carrying risk. Down arrows or counter arrows just are hideous. So you need to say, what's going on? What should it look like? I've explained we need to get some inversion going on. I'd love to see an inversion. Oh, look, here we go. Maybe I'll keep this over here. I'll put it up here. That's super easy to see, but at least it's on the screen. So you can see we're pushing up through that level. It's staying down. Bears are doing the work. Good job, bears. Keep up that emboldenedness you guys got yesterday, because if you do, if you guys really keep it up and you're the same bears from yesterday, we're going to be going through yesterday's highs. So keep it up. Just keep it up. Right now, I think we're just dealing with today's bears, but if they just hold and they're numb as can be, that's fine. I think this is moving a little quicker than I'd like, because those bears, remember those bears, don't forget, we need to make sure they're in the right emotional state or they don't move their stops. So got these guys, and okay, you guys need to be using embodiment while you're watching. Say to yourself, well, the last time you took a short and you thought you saw the candle and it came down, it went right back up, how did you feel? Just think about what that feels like. And remember, these are big numbers. So this was a full-size position for them, and it's coming back up, and now you're upside down just a smidge, one tick through the high there, one tick through your position. It's not too bad. It's not too bad. So what we need down is just a little rip down, just a little one, maybe down to 29.38. That'd be great, because 29.38 was a familiar number, right? We saw that earlier. It'll be a good limbic resonator to get everyone to go, yeah, this is a number we saw earlier. It's very safe. I love it. So you need a little pop down. And in that pop down, what I want to see is this inversion right here hold. So here, I'll scoot it over just a little bigger. So I want to see that come down and retest, but I want it to stay above that. So what is that? 29.30. So 29.38.75. Don't go much lower than that. A tick or two maybe, but that's it. You go much lower than that, let's start looking at other things happening. Just a little sweep down. We need to validate these bears. Pat on the back. Tell them they're right. Bulls are wrong. Don't worry about it. I know you guys are right. You're so smart. So smart. You guys are right. And they'll go, yes. Brain off. That's what the bulls are trying to do right now. I think this is a very active and controlled game. I do not think anything about price right now at all is random. There's no Brownian motion. It's not the square root of time for right now. It is all a very controlled game. to try and get those emotions just at the right sweeps, so that these bears can say, I am right. We need them to say that. We need it. Because once you are convinced, you see a little sweep in your favor, once you see that, it's over. Your brain shuts off. You are done. So we need that. We really do. Okay, so we came down. We got real close to that inversion level. You guys probably can't see that super well. That's a little better. Oh, we got through. So, okay, we got to 38, pushed through 38. 38 was that familiar level. Remember earlier it was like 38, 37, 36. Seem familiar numbers. Okay, so this is where I think that if this is going to work out and the bulls really are here to do their magic, this is what they need to do. It needs to come down a little bit. You need to see it hit these levels, and then it needs to do this shape right here. Let me draw the shape for you. It will look like this. You get the drip. I say drip because it moves very quickly, and then it goes like this. It looks like that. I used to call it a drip and rally because this moves quick like a drip. It's like, and then it just slowly grinds against you, and you get this just, it's really irritating, especially if you're on the wrong side of it, because it validates you, and then it slowly goes against you, and your brain shuts off. It's amazing. It's like magic. So that's what the bulls need to do. I think shoving this up through too quickly it's going to be a bad idea. You can't do that. Bears would have dumped. It would have capped off the amount of upside we could have got because we'd have lost our counterparty, and that's an issue. So that's where the bull's game right now is. Okay, so let's look at some other features that are going on right now that I think you're going to want to take note of. All right, so the constant thing about this strategy is keep your head in the future. So I'm constantly trying to talk about what I think the bulls are trying to do to the bears, because I think the bulls have a zero test here. They're doing their best to keep, and you can see daily tension right here has gotten -2, so it's popped back up. You can see 30-minute is continuing on through, but that's okay. That's okay. It can get through a little bit. It's just we don't want to see that just continue to rip down, because that means that tomorrow the bears will have control of 30-minute tension. It's like, gosh, give them control of probabilities. Maybe that's what happens. Okay, so this situation right now is giving you that big counter arrow, and I cannot help you with this phase. This phase, either you've picked out a narrative that is validated by data sets and you believe it and you think it's good. This is a situation where it's just pure risk. If you think that this is what's going on, it's important that you do what you think is happening. And if you got into a long, maybe you're in a position here, you have to say to yourself, I do or do not believe. It's just unavoidable. There's no data point right now that's going to say you're right or you're wrong. The thing that I think validates what I see going on here with this whole bears getting themselves knotted up emotionally is because I'm a human being and so are they. And it's my social skills, not my analytical number skills, that tell me this is going to hurt if we get all the movement that we want. It's not about numbers. The hard thing is looking through the numbers to the people. That's it. This whole complexity thing is just misleading. It's just smoke and mirrors. If you could just see through the institutions and the money there, it's all just plain as can be. They're just people. So the thing I'm looking at is not the numbers. I'm sitting here going, these bears sure look like they're getting positioned to become fodder. The bulls, they got some conditions here. So I'm just looking at this with embodiment. I'm becoming the bull and saying, oh, this is how I feel. I'm becoming the bear and saying, oh, I understand where you're at emotionally. That's the worst place to be. I hate being in that spot because it never goes well. So, this is where there's risk, because it doesn't rely on any data points. I mean, we have our data points. We have our narrative. We figured out what things going on. But now your choice to hold through this has to do with whether you believe the narrative or not. And it'll be really clear. If you sacrificed your position because you didn't believe, you don't believe it's real, and you'll miss it. And if you don't sacrifice your position and you hold, you need to make sure you're asking yourself, are you following strangers? Because strangers have this weird credibility. It's like, well, I don't know who this guy is, but he sounds like he knows what he's talking about. So all credibility to you, as though you can make me liable for your stupid choices. And so you may be guilty of trying to offset your liability on a stranger because you feel no tie to me. You need to be careful following strangers. You need to look at this and say, does any of this make sense to me? Do I believe it? Because if you don't really believe it, it's not really yours, it doesn't stick and you won't be useful for yourself. You'll just sit here and go, now what were the rules? And it's not about rules, about people. So if you believe there's bears and bulls and they're doing what we think they're doing and they're fighting over possibility space and they're about to emotionally crush one another and there's a fight going, then to me, this looks like the bears are getting pushed up against the wall. Okay, so I have to say that I can't make this choice for you. I can't tell you what to do in this situation when there's just raw risk on the table. It usually doesn't have to do with number sets. It usually has to do with whether you really believe what you're doing or not. And the market gives you a big counter arrow and says, it's all going to fall apart and you're going to die. And you shouldn't hold because you think I would tell you to hold. You shouldn't dump because you don't believe me. This is about you. This is all about you. And so you need to say to yourself, I believe or I don't believe. And if you can't answer that question, you really need to put your training wheels back on. I don't care how long you've been doing this. If you don't believe what you're doing is real and you can't see people, you're not ready. And you should be careful trading. So, all right, out of the way. Let's take a look at the bearish case. So we've been talking about the bullish case. It's good. We've been walking through that. I like it. Okay, so let's look at the bearish case. So what have the bears got going on? Well, if you heard me right, these guys here kind of, if this moved up to here, they would feel pinned, right? They'd be like, oh no, this sucks, right? Well, one of the things that happens with these tools, you get a decay retest. So it's a little bit behind that thing there, but it's about here. So a decay retest, I know this is a terrible line. And a decay retest is a last-ditch effort. It's a Hail Mary pass. It gets you a little foot in the door, but it exposes your stop. So you're easy to crush, but usually it'll kind of pop markets in your favor. So it's like, yeah. So a lot of traders think decay retests are just the bomb because you get into it and it like makes you a little money and you're like, but it's just because they kind of pop positive pretty well. And so they look attractive, but a decay retest is just useful if you're screwed. So really, if you're just constantly trading decay retests, you're trading with screwed people. Just think about that for a second. If you're constantly just trading decay retests, you're trading with screwed people. They're the people at the end of their line. It's their last thing they can do is trade this. It's the retest of decay, which is like, energy got up to 10 volts yesterday and it gets to 10 volts today. I'm going to trade a double top or maybe a trend line or something. It's that kind of stuff. So your stop gets exposed, but it does give you a little pop. So it feels good, but it's not as effective as trapping in the opposing side, picking up liquidity, taking time to build conflict, and running a market. It also doesn't make as much. They can do really well under the right context. So understand that decay retests are a Hail Mary position for somebody at the end of the rope, and they want in. So the question is, do the bears want in? I'd say yeah. I mean, we've seen twice that they showed up. So if this comes up here and tests that, the question is this their last-ditch effort? And the thing you have to look at is velocity. We can see velocity come up and sample them right there. We get velocity go from negative to positive. Retailers go, positive numbers means up, and they all click buy. We get liquidity. The bears could get resampled here. So the question will be between these two. If decay gets and retests first, that's not the last thing on their playbook. Velocity. The bears need velocity first and then decay. That would be their best position if this moves up and the bulls take this up. What else could we do? Well, what else could bears do? Right now, we have the bulls in, I think, a superior position. They got that daily tension here, and so I think the bulls are feeling pretty good. they're really, really close to getting this maybe to a position where they can get those bears into the emotional hole, right? And this is the same position the bears were in just an hour ago, emotionally, right? The bulls are starting to feel a little bit emboldened. I mean, I'm like advocating. I'm like, oh, I think the bulls got this. I'm probably have that tone, but I just have that tone because I am embodying the bulls. Well, if I'm going to embody the bears, I'm going to sit here and go, I see what those bulls are doing. The bulls, they think they got this. Well, I mean, looking at tension, it's like, okay, but emotionally, they're in the same spot. So how would this work for the bears? One of the best ways for the counterparty to get their foot in the door, to get that controlling party to just move, is to get more samples of the controlling party. So remember, the rule this morning was to say, if the bulls fail, the bears get the nod that would let them take over the market. The bulls didn't really fail. They just sort of waited for the retest, and then they picked that up. So the bulls never gave the nod. So what the bears could do is get another sample, get more data points. Because what if this happens? What if decay came down and sampled here? Price just and then the bulls didn't pick up the sample. All of a sudden, now they got that nod they were looking for. So getting another data point would be absolutely a good idea. How do you pull that? How do you get another data point? Well, in my opinion, right now, the best thing that the bears could do to get another data point, and this is important that we draw both directions, is to do nothing. Let this go sideways. I think that going sideways would likely, have that happen. We could get decay down, and then, at the right moment, get that down for a test. I think that would be the most likely thing for the bears to try and accomplish, is to just sort of make it look like nothing's going on. And that would help them try and get more data points for the bulls to see if we can get that bullish nod, would let them take over, and then they could drive this down. Because right now, what the bears want really bad is to get this tension number down. If it did that, got down to here, tomorrow morning, they're going to be this much in. We could see it gap up even, and they could pump it down even further. So that's what the bears want. They want that. So if we could get this, move sideways, sort of casual, there's no threat. Bulls, we'll hold. Don't do anything aggressive. Because remember, the goal is for the bulls to not do anything, right? You want hands off. Oh, don't do anything. We'll hold. They won't. And so it could just go sideways for a while. And if it goes sideways for too long, we might get another sample. But are we? I mean, the next sample here with velocity is going to be bearish. So there's no other sample. Just like it's bearish. So that's a scary play for the bears to be facing down. And you can see tension is slowly making its way down, but I think the reason that it's sort of slowly making its way down is due to time more than impact. We're getting a nice slow sideways. Remember, the bulls are not hitting. We won't see this 30-minute tension curl up until these guys liquidate. And there's a good chance they're holding for this pivot right there. It's just a good chance. So we have, you could see, can you see? I'm trying to paint the picture of the tug of war that's going on here and why that I think the bulls are winning. The bears have some opportunities. We mapped out their decay retest. They could get another velocity test, but you can see that, right? Like getting a velocity test would probably mean this. Getting decay to sample the bulls makes more sense, but that means going sideways for a while. Well, going sideways is what the bulls want. So this is a messy situation. This is where the complexity starts to get to you. And this is why I said when you finally pick up on a narrative or something, and if you try to pick up this, we're at the point where we're getting this feeling where it feels like that. And maybe that's the case. Maybe you need to heed that down, or I can't make this decision for you. When it comes to risk, you need to know what you think's going on and what your tools are saying. Okay, so we're getting a pretty decent sweep down, and it looks like the bulls will be holed up right about here, 30, I'd say 25 easy. I look 25. Looks like probably about there is where I think the bulls would try to liquidate. So look at tension. So this is the spot where the bears, they got to do a lot. So 33 is not enough. Not even close. They need to get down to 29.20. They have to get that down because they need tension to move in such a way that it's going to come out. They don't want to see this. Another thing that's possible, and this is on my mind just because I've seen a lot of movements and stuff, is getting tension to do something like this, and then the next morning it just opens. Like it's under, but it's not far enough under that it can't just gap over. I mean, you can see about how big these are. So closing right here, or just have it go like that, it could still pop up the next day. And so this is like a strategy thing. If the bulls do just little enough, we could get tension to sort of curl, close, and then the next day it gaps up. And it's like, oh, it was never really negative, was it? Okay, so if you're thinking about the bears, did that move down validate you? We got down to 29.30, right? Oh yeah, 2,900. Yeah, that's kind of where I'm eyeballing. I think that skid down right there was the skid we were looking for. There was a couple little moves there, but that skid down should have caught your attention. Anyone who was bearish just went, good, oh my gosh, and it sort of leaned back in their chair. So I think that was the move that we were looking for. The other ones were just like little, they didn't really catch my attention. That one caught my attention. If I'm going to be a bear in this situation, I see that skid down, I'm going to go, oh, okay, finally it's going to tank now. That's how I feel. Now the bulls are going to be going, oh, I did not like that. Oh my gosh. So if you were bullish and you had a long position, you had to ask yourself, do I really believe this? Or did I have a break even scooted right up next to my position and I just lost it? Because if you had a break even right up next to your position, what you're telling me is that you don't actually think this is going on. Oh, I'm scared. I don't like risk. And you need to carry risk for the thing. If you don't carry any risk for the things that you believe, you're not really carrying risk. So you're just a statistic, easy to knock out. So if you had a break even right there, I understand. I totally understand that. If you're trying to follow me and you're like, well, I don't want to lose money on this guy, good, that's fine. But if that was your idea and you thought, hey, I think this is what's going on, you can't be all break evens all the time. I mean, you just end up getting a bunch of break evens, and then your losses completely outweigh. You gotta have an idea. Say, this is what I think's going on, and go for it. And if you think that sweep down was too much, you're like, I didn't think that should happen. I think it should have. Well, get out. Do it. Do what you think is good or makes sense. Don't give into that fear. And the way you avoid all that is by knowing what's going on, having a narrative, having an idea of where the players are and what to expect about price, embodying each side. Okay, so we got the sweep down. I think that this should grind up. I really don't think that that this would make a whole lot of sense. Like moving down, testing lows. No. That move down to 30 was, it's like 31. Totally sufficient to convert those bears into apathy. And that's the goal of the bulls. Bears, on the other hand, need to push now. If they're not going to do something aggressive right now, the bears are not going to be able to, they're going to run out of options in the next 30 minutes. So there's a part where we just wait and see if which side is doing better. I personally think this is bullish. I think that the bulls have a great case. I think the bears were too eager. They got in early. I think this move down should have been designed intentionally to convert the bears from hope to apathy. I don't think it should be moving down and testing the lows. I think that's the wrong move. If that happens, then I think the bulls, at least the ones who are really paying attention, are going to say, No, that doesn't seem right to me. And so they're not gonna like that. I wouldn't like that. I think we need a nice scoot down and then just move up. Now, if the Bears can keep this here, I mean, you can see that decay is getting much closer. Remember, the best way for the Bulls or the Bears to get their foot into controlling probabilities. I mean, we're right at the zero. This is anyone's game. I think the Bulls have a better chance because they can defend that tension and it could work for them. But if they can get that decay down to zero and sample those Bulls again, we could see price move down, sample them. I don't think that's the right move, but it could happen. And then at that moment they can be like, "Oh, you guys failed." And if we see those Bulls step out of the way, the Bears should get bearish, where they just come in. I don't think it would lean back and sample Bears. Just go. If the Bulls don't come in and hit that in a minute or 2 or 3 minutes, I think the Bears would just pile on at that point. And the reason for that is because I think that this was a legitimate bullish position, and I think that everything lined up. And what that ends up telling me is that the institutional players, just to make this clear, there are no Bulls and Bears. None. There is institutions, and we don't know which side they are. So if we see the Bulls get a great position and just do nothing in this situation, we had it yesterday, we get it again today, then what that starts to tell you is, I thought this was the Bears cheating, and we start going, oh my gosh, longer term, the Bulls just stop playing, and it's like, So that's kind of the way you look. Really, we're just trying to figure out which side money is on, but you have to treat them like they're individuals so that you can categorize, qualify, and track out possibility space. I don't even think a lot of the institutions completely know exactly where everybody is. So there's a little bit of deductive work, I guess you could say, going into that. So right now, if we have this I think the conflict was there, the money was there, the liquidation was there, everything like this reminds me of yesterday. And the Bulls do nothing. You start to go, these institutions are having a hard time being bullish, and the Bears are going to come in. So that's where I think this is at for the Bears. So we just have to wait and see if we get this to come down. Now, let's take a look at our inversion. You can see that where I was looking at it, we started to have some troubles right here. I was thinking you want to get it over the inversion. Let me show you an example so that you can get an idea of this really quickly. I need to zoom out. Oh, I don't have it. Okay, here's right here. This is right off the open, but you can see it popped over it, retested it again, but stayed above it. This looks like a great inversion. Then it came back down and tried to get back through it. So that's what I expect out of an inversion when I see these things happen. You want to see it get over and hold above it. It's not really all that useful on its own. You need context to help determine when to and when not to look for inversions. Otherwise, you just find yourself chasing your own tail all day. All right, so this is getting down 29.30. We're starting to look at that point where, again, the Bulls are feeling pressure. This is the second time they felt pressure today, and the Bulls are watching tension get to 6%. It is moving through the zero. They still have daily tension right at zero. Very irritating position, because if you're a longer term player and you're looking for into tomorrow or something like that, there's a lot of leeway in a daily zero test. There can be a couple of bars in there, and those are 5-minute bars, like 10, 20, 30 minutes sometimes of difficulty. And that is not something I'm saying to you like, so hold on to your position. You need to do what you think is right. We've talked about how this should look. I've given you what I think's going on, what I think the Bulls need to do, what the Bears need to do, and what they both want out of the market. And at this moment, you need to make a choice about what you think's going on. But these longer-term Bulls have some flexibility, and that can be very frustrating, because what's happening is you say, well, a nice zero test is a signal, right? Well, one of the tricks markets like to do is give you a signal, and then they take the time factor, which you assume a signal has a moment, right? Happened or it didn't. It's like, oh, that's stupid. That's not how they work. They'll give you a signal and they'll drag it out for 30 minutes and then trigger it. And you're like, I didn't realize that signals could do that. And it's one of the features that can crush you. If you're a signal chaser, you think that signals are in a moment. So you try and buy it, and then you get stopped out, and then it goes and you're like, oh my gosh, there's my signal, but you already lost money and you're too much of a pansy to get back in because you don't know what you're doing anyway. So signal chasing has these time issues that you don't realize until you're trying to do it in real time. And daily tension is giving us one of those where it's sort of sitting at zero, and it's, if it popped back up right now, it would look just like a normal one. I mean, look at the one Tuesday. It took a little right in here. So I'm explaining this because context is far more important than the signals. If you're just sitting here going, oh, daily test, blah, this, blah, blah, you're missing the whole point. We're looking at the narrative. We're looking at the pressures. We're looking at how the bulls are getting pressured. The bears are trying to pressure the bulls, and they got it down. I think that was a deep dive, too deep. I like it when markets just do exactly what I want, which I get most of the time. And today the market it's not terrible if I don't have a long, but if I were long there, I wouldn't like that, but I'd be looking at this thinking, well, I'm not sure I like what tension looks like. It's a lot of pressure. And because yesterday wasn't amazing, I mean, this is where the pressure is. This is a big, scary moment where you need to make a choice. I sort of stick to my ideas. I'm not super great at taking the things that I think and throwing them out the window because of price movements. It's not price that I fear. It's context. I get nervous when the context starts waning against me, when I start to see the side that I'm fighting for dropping the ball or making mistakes or doing things that I didn't expect. It's like, well, what team am I playing with? I don't like to play with a team that I can't predict. So you should get to a point where you could start saying, this is what I want to happen, and it starts happening. And when that starts happening, it keeps happening. You should be in a position at that point, and then as it continues to happen, you could add or fold and stuff like that. And the only way you can handle the counter moves, which that's what we have right now. If you're bullish and you're like, I think this is a great idea, it didn't move quite down enough. You can't survive this dip. You can't. Signals, you would have had your break even taken out, and you won't be able to refill. No chance. You have to say, I think it's going to work. And you had to have your stop a ways out, and you said, I'm taking a bet on an idea, not a signal with a good money risk reward, because risk rewards are just statistics, and markets can optimize you out really easily. Optimizing risk reward trading out it's not even calculus, it's just algebra. So simple. So in this one, you have to say, what do I think? I think that I don't like what the bears are doing. I think it got too deep. It shouldn't have got that deep. But it was too deep. I would exit and wait, because I think that that's not what I wanted. Now, okay, what I would probably be doing is sitting on my hands and saying, this is my idea. Yes, that's usually what I do. I don't really like to flip-flop. I think that we saw what was going on. I think we saw the bulls doing stuff and the bears doing stuff. I think the bulls seemed like they had a pretty good case. I think the bears are doing a push here, and I think the bears are going to get destroyed. That's what I think. This narrative looks to me like, this situation looks to me like, while this is wide, we're getting sort of this type of thing going on. It's going to move like that. We should see decay, maybe do something like this, get this up to 0. This might go a little bit deeper than we want, and that's going to be an issue to deal with tomorrow. As for right now, I think the bears are building themselves a pretty good case, but I don't. That wasn't enough. I mean, it's not. They're going to need something really dramatic, and unless there's something that's on its way in, which I don't see that kind of behavior. Yesterday we saw that kind of behavior. We saw the bears come in. It took a little while. It moved. It was like, oh my gosh, you guys knew something. Today is just very reactive. They're like, oh, liquidity, sell it. Liquidity, sell it. And the bulls are a little less that way. The bulls are like, well, let's see what's going to happen here. And one thing I really don't like is that the bulls just are in a constant waiting pattern. They're just doing the bare minimum to keep tension up. Their whole plan, I think, is to say, let's just do as little as possible, get our position in, and then the bears will overdo it, overinsure themselves, and then start to grind up against them, and we won't have to do a whole lot of work. And you got to do a little bit. That's kind of how I'm feeling. You guys got to do a little bit. I mean, you can't have this come all the way down and then they get emboldened and then emboldened again, because it's not that bears can't destroy you. Like, they can take capital and just, they can do it. I mean, it's not beyond their means. You give them too much leeway and they will. And bears are the worst, because they're the kind of people who say, I don't know, hold on, wait, go. And then everybody goes at the same time. It's very frustrating, because bulls are very like, okay, here's a position, putting all the pieces together, they fill into it. Bears just like, wait, fill everything now at the exact same time. 2 seconds to get your fill, 10 seconds, and you're already out. And so you let those bears get too close to what they want, and you see they sort of dogpile. So I don't like what the bulls are doing right now. I think it's lazy, just lazy trading. Letting it come down and get this close to getting you inside out, and you have everything lined up and things are there. It's just lazy. It looks very lazy to me. It's like, is it really that hard to just show up? Is it really? Is it too difficult? Are you too concerned? So that's the way this is interpreting to me. It doesn't look like they're completely gone. Like, I'm not sitting here going, this is going to crash. It looks lazy. Like, this is trouble. I've seen it. This is sort of a data point that I'll sort of log in my head for later. Not to do it today or how today's going to work out or tomorrow, but when I start to see markets where the side that's making all the profits and has good things going on, it's like it's just too painful to show up and make money. It's just doing so well. That is a really bad sign, because that leads to that euphemism where euphoria, where you've gotten past euphoria. Like, you're doing so well that it's just too hard to do well anymore. And that's kind of how this smells to me. It's like, is this just so hard for you to show up? You just have to do what you've been doing for months. So this is a characteristic of the bulls I'm going to keep my eye on for the next couple days, into next week. As far as the bears go, I think the bears are very emboldened right here. I think they were able to pull off some magic yesterday, and today they feel like they got the bears up against the ropes. So this is how these two sides are configured right now. It's really important that you keep these things in mind, because it's going to let you understand why the bears are going to do what they do if they can get this down and they get that daily tension down and they liquidate those bears. You're going to go, I know why they did that, because they're going to get really excited. They got those bulls. And you're also going to understand if the bulls are able to defend this, get this to grind its way up, and you're going to see it move up, and everything that plays out there, you're going to say, I totally get that. And the most important thing for me is not necessarily one way or the other, is to say, I see what's going on. Because once you say, I see what's going on, you become a legitimate member of this group. And once you feel that way, you can start to make legitimate decisions. You can start doing things like taking risk. But until you're a legitimate participant, you can't actually carry risk. It's not a capacity of an outsider. You're constantly ostracized because you have no idea what's going on. And so you can't carry risk. And because you can't do that, you start doing these funny little things like moving your stop around a whole bunch, or changing your mind back and forth. Or my favorite one is go flip through the internet for a new trading strategy because you got stopped out once or something. And you're like, well, time to throw that out the window. quick, pull up my RSIs and CCIs and trend lines, and let's put together 15 things that'll work together to give me money. And what's happening is that it's not that you lost, it's that you felt like you were an outsider that got validated, so you're trying to cheat your way in. And until you feel like you know what's going on, you can't make legitimate decisions and you can't carry risk. And you absolutely can't tolerate being wrong. So being wrong validates that you're an outsider. An outsider, human beings are wired to feel being ostracized is death. So you can't tolerate validation of being an outsider. You need to know what's going on. And then you can make choices, good ones, and actually participate instead of trying to do money management magic like math is going to save you or something. Okay, so we've gotten to a point where these two sides, both sides, in my opinion, are feeling burdened. The bears got pressured. They felt a lot of pressure, I think, because the way things were working out. They got a validation. That means that apathy starts to be a problem, and so it gets to be drudgery. It gets really hard to add more effort to something that you don't quite care about. So if they've moved into apathy, then it's like not caring about, doing the laundry and then having to do like 15 loads. You're like, oh, this sucks. But if you're like all motivated, you just get it done. And I think they're sort of in the apathy mode. This whole thing is just like, for the bears. They got there, we put them into hope, we got that validation, we moved it down, things are getting a little bit difficult for them. The bulls are feeling pressure. They need this to work out just right, or it's not going to be able to keep their control over the market. Why it dipped extra deep here, this is risk. I didn't like it. I don't like what it did. I think it's messy and lazy. But daily tension has been resilient. Like I said, the bears are going to need something very aggressive to get this down, like huge. So unless that's coming in, this to me still looks like up. I know I said I'd probably dump it, but that's just because it wasn't behaving the way I want. But I don't know. Maybe one of you guys know that the Federal Reserve is going to come in 15, 20 minutes and say some horrible thing that everybody just freaks out about. They'll trigger the algos. Maybe. Because they're going to need a decent move, 15, 20, 30 points down. Completely agree. Andy, I think there's some lag here, but I see what you say. It's like they're being lazy. Like, come on, like bulls, what are you doing? And I'll tell you what they're doing, okay? This is really important because this is how bulls think. They're like investors in a company. Like you put the money in and then the employees do the work, not you. Bears think you're selling, I'm selling, and that makes you sell, and then I sell and you sell. And it's like getting someone to punch themselves in the face while you punch them in the face. It's like everybody do it at the same time. That's how bears are. Because they need to swamp the ask, and get all that money moving in one direction. But the bulls are like, well, let's position these investments, and then let's get the other side to pay for it. So they're like a little bit slower, but they got more structure. So I'm a lot pickier about the structure of bulls. Bearish trades, you all probably know I'm not a big fan of bearishness, but bears tend to be very slow and then all of a sudden, and so I think that trading with the bears tends to be far more painful because they lack so much structure. They're like the ADD of traders. They just like, oh my gosh, and now, and then you can't get them to focus on anything else. It's like a video game. So, oh my gosh, turn it off. They're like, I can't, and they just keep going. That's how bears feel to me. I mean, just look at yesterday's morning. They got in. It was just insanity. And then all of a sudden, like, what the heck is wrong with you? And bulls picked up the lows. They had like a couple minutes where you had to work that out. never came back. Like, bears are the worst. They're so the worst. So anyway, I think this was a deeper move than I wanted. It got right back down to where decay was. I think this is looking better. What you want to look at right now is where are the traders? And I don't mean historically. So we can now look and say, well, if velocity moves up here, we have the bears, right? Right there. If decay moves down here, we have the bulls. And you can kind of notice this distance here is almost the same here. It's almost like they balanced each other out there. And then you say to yourself, well, what do these sides want? This is a constant. You're always going to hear me. What do they want? The bears want this. At this point, I think the bulls would love to see something like, just right about here where they could easily gap it up the next day. I think that's what the bulls would like for 30-minute tension. Daily tension, bulls want it up. I think the bears actually would be fine with daily tension staying up, and then they get it down to here, right? And then tomorrow morning we open. It can even open up a little, and then they just pump it down, and daily tension goes under, and they have control. So I think this is where they're wanting it to go. So this is looking good for the bulls, to me, my opinion, because both sides can kind of get what they want, doing almost nothing. Like just sitting here, looks like tension could probably just keep moving. Nobody has to do anything, and tension will keep marching down. And again, I thought that, when we moved up, I was hoping for the inversion to hold together. Still think you hear the thing I'm saying. I'm sitting here going, well, if the bears do nothing, they can get tension down. If the bulls do nothing, tension could flatten if things rise. And so doing nothing is not going to win the bears over. But that is the most logical thing, I think, for the bears to do, is just sit on their hands, which I don't think bears are particularly good at. So I think this is a still bullish. I know. I just don't. I think we got to medium complexity, and this is a point where that you're having to ask whether you believe in this in the narrative. And I think this whole section, for me, and I'm not trading this because I will walk through every step so that you guys can hear all this thought vomit. Sorry, thought vomiting. I think that this section was building the complexity. This section we got to medium, and then we got the conflict here. So we had this dynamic. We were looking over here and we were saying, this looks a lot better for bulls. Got about here, and then right about, if you were in here, you were asking, should I trust these bulls? Should I trust these bulls? It's moved down. You easily could have picked up another long there. I think this is so. Just don't switch sides super well. You have to describe both sides, or you're ignorant and you'll get screwed up. But I think that this move down was all about trust. And when I say trust, the question is, do you believe that the bulls are going to do what you think the bulls should do? Trust is the mutual unspoken cooperation between investors that just exists. Okay, so if you were long right now, are you making yourself money? No, not even a little bit. Nobody in this trading room has the capacity to make money for themselves. You have the capacity to get other people to do your work. You don't have enough money to move the S&P 500 up. You just don't. Nobody cares about you. You might have enough money to move it down 2 or 3 points if you had 10 contracts on there. The market might just slide back and pick up your stop just because. But you don't. So what you're trying to do is you're saying to these bulls, which I think it's, the bulls, is to say, I believe you're a human being, and I believe you're going to do the most logical thing. And I think the most logical thing right here is convert these guys into apathy. And we had a nice sweep down there. So I think the bears are all set. There's just slowly move the market up, and the bears are just going to eat it. They're just going to let it go. They'll just let it go. So the question here is trust. Do you trust that the bulls are, one, real, and two, that they are human beings who will do what you would do, that you guys are on a team now? If you don't trust that, you can't handle the big counter arrow. And I think this dip didn't act the way I wanted, and that really frustrates me. I love markets to just do what I want. I get it so often that I get picky. But if you follow the narrative, I mean, I think the Bears, I think it's too much work for the Bears. It's just too much. Like, it would be way too much. So my anticipation after a deep dip like that, I don't think it should come back down. It shouldn't have come this far down in the first place. It shouldn't have. We should have gotten ourselves an inversion, maybe a sweep down that was real quick and converted the Bears to apathy. But I just don't think it should have come down that far in the first place. So, I'm pretty inflexible about the things, the ideas. I really have a hard time going, I see what's going on, I see how the players are, and then something bad happens, and then I just don't drop it that easily. I might cover my position because I'm not getting everything I want. I think that's a really important thing to do, is to say, I know what I want, and then when you're not getting it, you exit, or you are getting it, you hold. I don't switch sides. I don't think at any point I would sell this. I wouldn't. I don't think I wouldn't. I think I would have bought the last dip, this dip here, because, well, you can rewind the video and go see what I was thinking at that point. But I think that these were good spots. We had this spot for that daily retest, all that stuff. So at this point, if these bulls aren't going to pick this up and go, I think that screw the market is the attitude. That's how I'm screw this. Like, it's game time it's game time. People are on the veritable court, and they're 6 feet apart. So they need to go. I don't think there's any more time for screwing around. And this whole thing was just lazy people being lame. I don't interpret this as waiting. I don't see that the bulls are waiting for something. It's not like they're like, I don't think there's like some news event coming that's going to benefit them. There could be, but I don't see that in this structure here. The Bears, I don't see them having any ace up their sleeve. I see them as getting enthusiastic because the bulls are sort of being sluggish. They see a chance and they're like, going for it, but they never got the nod. They never got the like, okay, go from the bulls. So their enthusiasm's running up against the controlling party, and that's just doesn't work. 30-minute tension has moved under zero, which is giving the Bears control, but it's not really control yet. It's, tomorrow is really, I think, the focus right here. The mindset is get yourself into as much advantage, or into the right footing today to have as much advantage tomorrow, so that this is far enough down that if we get a gap up, they're still in control. That's the whole point. You want to get that footing to be resilient, and it's in the resilience that gives you that power. So I don't think the Bears are. I don't believe in the Bears. I think the Bulls have a better chance here. So that being said, if the Bulls don't work out, it comes down. I would think the Bulls had an ace up their sleeve, actually. I think that the conditions have been pretty favorable, and if the market moved down, I would be thinking something, because we see this every once in a while, is that if the Federal Reserve is going to come in and say something that's going to help out the Bulls, we'll see them stair step it. So you get these concepts, right, and then it moves down, stops them out. You get a signal here, not signal. The idea is right, and it's and they'll stair step it down until that news event. And I've seen this a couple times. It's usually only if there's going to be a doozy, like something that's going to drive it straight back up and through the roof. Because the question is, well, why would the Bulls put themselves at so much risk? Like, why would you do that? Bulls don't do that. The only reason is because you have an ace up your sleeve. That's the only reason. That's what the Bears did yesterday. And we've seen them do it a couple times before. It's like, why would you expose yourself to so much risk? And it's because they know. And that's the only reason to do it. There's no other reason. More laziness by the Bulls. It just seems so pathetic to me. They've got everything they need. And this will be day 2. This is day 2. So I don't think this should be happening. 29.29. No. Shouldn't have happened. Not a fan. I'm going to take a look at the curved standard deviation charts. I use these because they're a good at a glance. Oh, hey, did you see that? I flipped around. They're good at a glance, so you could see what's going on. I have soy. This is my way of watching China as I look at soy. You see that money's moving so into the dollar, and that means that it's coming from somewhere and creating demand in the dollar, and that's it's moving out of something. We have it coming down, hitting the value area at the low. Our debt market is flat. We've seen some movement here, but in my opinion, this looks like nothing's happening. Unexciting. Gold, unexciting. I think this is just giving everyone a heart attack is what is going on with gold. So it looks like somebody has taken some profits in the market, and that may be what's going on. Is the bulls are taking their profits on the big major move, and you can see I'm scaling out here, going, well, why would the bulls be like this? I don't like the behaviors. Why are we getting this attitude from them? And seeing the dollar push up through this, and seeing what the bulls are doing, and their sort of their laziness, I may be seeing the bulls are taking some profits, some short-term profits here, or long-term profits. I don't know, but this whole move up, that's a potential. I like to see cash moving out of the DXY. So I want to see the dollar, money moving into something else. I want to see it going out of the dollar into something else, and then that helps me go, oh, hey, yeah, money's moving in, and then you can see where it moved into. And those tend to be much better situations than when you have stuff moving out of the dollar. They're just being a pain. These guys are just being a pain. You see the games they're playing with? I don't like these games. I hate games, man. This is all gameplay. I think everything past about here, right here's just been games. A nice slow move down to make you hate it. A nice slow move up to a spike down. That doesn't. This is just gameplay, like games. This is not. I can see what's going on, and this is just annoying game. I hate what's going on because it's like these bulls have this crappy attitude of do literally as little as possible, and it's keeping the market from really doing anything. And I think it's this. I think it comes from the fact that they've made way too much money, and it's getting painful to show up, and it's going to become a problem for the bulls pretty soon over the next week or two. I don't like that attitude. It's too hard to make money. Shut up. Tough. But it looks to me like in the end, what we really have accomplished here is you can see that decay seems much closer to testing than velocity. So it looks like the bears are slowly maybe trying to get that extra bullish sample, but that's a tough situation for them to be in, because if the bulls show up again and we have this, especially if it samples here, it samples higher or something like that. Yeah, I mean, you could see what the bulls would do, and that's going to put the bears in a bind. Otherwise, drifting this up to here could sample the bears, but I think you know that price would move. This is just a tough situation for bears to be in. And the thing that's sort of annoying is that they're getting away with more than I think they should. These bulls, I've seen this. This is not the first time I've seen this play. The one that we've been watching. This is a pretty common thing to see, like these events. And seeing it push down, things got uncommon about here. It's just like, but I've seen everything else. Like the whole bulls just sit and wait for bears to topple themselves and overinsure. We see that. That's a mentality that bulls have all the time. You should get used to it. They like to sit and wait for the bears to finish up what they're doing. They're like, you done? And the bears are like, no, a little more. The bears get done and the bulls are like, and they love doing that. It's just, that's how bulls are. But then seeing them try and do their thing and then they actually lose a little ground, feeling pressure. It's almost like it's just wants to implode. My opinion is that if the bulls aren't able to pull this off in the next little while, I mean, I'm not going to stick around for this. Like, markets typically do exactly what I want. Like, you're like, oh, okay, here's the thing that develops, then it works out. Like, that's what I like. And so if this is going to take all morning and do very little, then we have a situation where one side can't quite pull it off. And it's like, well, I quit. I don't want to deal with this. It's Friday. I'm not gonna go to the weekend banging my head against the wall. So, okay, so up next, what's next is we need a bearish or a bullish sample. And the thing that's sort of going on here abstractly, if you just, or generally, if you just sort of step back, you said, is there sort of the distance here between this and this sort of leveled out and they sort of evened each other out. It was almost like, well, which way do we go? And either way could work. And occasionally you'll see this and it's something that just takes experience to see. They sort of balance each other out and you just sort of eyeball it. There's no, you just eyeball it. You say, these things just sort of balanced each other out. A lot of the times what'll happen is it'll just sit and do this kind of stuff until the imbalancing can happen again. And you can see looking at, let me get rid of that. My face just like flipped the other way. It's weird. Here, that the point of control, you see how we've sort of been going around? It's like just bobbing around. So that's where I see this at. I don't know what events are coming up. I don't know what people are seeing. So one of the ways that I think could be very useful for anyone to take advantage of this is to whatever fundamental things that you have going on. If you have some system that you like to use, you can see who these players are. You can see what will be good, what will be bad, and then take advantage of them accordingly. The point of this is to help you say, I see what's going on. I know who they are. You can pick up on the frustration. Hopefully you can hear how frustrated, like, this is annoying to me that these bulls are being so lazy and they're letting these bears get away with so much. It's like, and I'm annoyed because bulls are usually more structured and prompt. You know, they show up when they should show up. They do what they should do. They wait for just the right moment. They get in and it goes. This still, if I hadn't exited, if you were still holding, I would personally have my stop probably 29.26. I usually will hold up to 10 points. And I don't usually fold on an idea. So I can't say what I would have done because I'm not in a position and I act different when I'm in a position. But I know that once I get an idea in my head and I'm like, I know what the idea is, I don't usually fold because for me, the most important thing that you can do, that I can do, is to trust myself. If I had an idea and I saw that idea develop and it was working and everything lined up, I'd rather lose money trusting myself and coming back next week unbetrayed than if I got out and obeyed fear and totally betrayed myself, and then I would have to deal with apologizing to me, because that's what happens is there's like a part of you that gets pissed off that you don't trust yourself. And that part of you that gets pissed off requires that you take time to like say you're sorry. If you don't do it, you think it's silly, you'll come back and that part of yourself's going to make you pay. You can either take a bunch of losses for a couple days, or you can sit down and tell yourself you're sorry. I've done it. It works. You just got to make sure that you're being true to yourself. Once you get that good idea, you need to make sure you know what your ideas are and when to trust yourself and what that means and how it feels, because if you can't get there, you won't make enough money to actually do this as more than a great hobby that hopefully doesn't lose enough money to kill off your bills. You just can't. I don't think it's possible. You need to learn to trust yourself. Say, I know what this is. I believe. And then once you get in, you stop asking questions and you just say, I trust. I get very frustrated with these things because I've seen them so many times. So I see a lot of nuance and personality in the way that this is behaving. And I just want to, whoever's running the desk, I just want to grab and I just, like, in my head, I'm sitting here watching this. Put the burrito down. Okay. Put the burrito down and trade. That's how I feel. I feel like they're just sitting there with a burrito and maybe a margarita. It's Friday. Let's go slow. Irritating. So we're still not out of the woods. I see what the Bears have in front of them. I still don't think it's a better case than the Bulls. I just don't. I think that what the Bulls need to do now, they've done enough, but what they need to do now is give us a move higher. It could be a slow grind. I think probably even a pretty straightforward upward move would be fine because of what has already happened. I think everyone's pretty much entrenched in their position. I think the Bears are hooked. The Bulls are hooked. Everybody's in. Opinions have been fired across the bow, and it's just, get this to work time. If I were a bullish trader at a desk with a lot of money, what I'd be doing is I'd be going out and I'd be flickering orders across stocks that were near their lows. I'd be flickering a bunch of orders, trying to inspire volume into lows, and then pushing those stocks up just a bit. Like that. I just flick them up because that way you get all these stocks at their lows looking like there's buying into lows. And then I would buy into lows. And then that would translate into the SPY, at its relative lows, down, and just hit it a couple times, maybe penned a $10 billion order, $10 million order, something really big up above the market. Put a big order up there. Tell the market, hey, come up here. And what will be nice about that is if you put a $10 million order up at 2,900 right now, it's going to match up with the stops for these bears. So it's a perfect play. I don't need to see the order book to know that's what I would do. So be a lot of volume coming in on stocks. I'd be penning an order above the market. I'd have bought a bunch of long. I'd have gone long. So if you went long, you could do this. But if you really want to take big profits, you get in here. So if you got in at like 33, and we're finally seeing some action. This took forever. I would have hated this trade, by the way. I would. I don't know. I can't say because I didn't hold a position. What you want to do is you want to get into a position. You want to make money. So let's say you get like 8 points out of it or something. Take that money and ask yourself, can I use these 8 points to hedge with an option? And if you can get into a positive spread after the rally, I want to say this right now. A straddle, a vertical position, these are not things you do at a moment. It's just wrong. Markets have been teaching you this wrong all along. What you do is you sell a call, or you buy a call at the low and you sell a call at the high, and that's how you get into it, so that you have positive money in there. If you do it all at once, you're in a losing position. So you should catch this while it rides up and say, oh, I got like 4 points, 5 points, and then say, can I put this money towards something that will hedge my risk? And if you can, then you can get into a positive spread position that can give you room to like go to sleep at night and let the trade run. Otherwise, I think that the risk gets way too high if you can't hedge. It's just, I've done it too many times. It's like I have more gray hair than I should at my age. Holding overnight will keep you up. So if you want to try and do more than just a decent profit, you should hedge with an option. Take your profits and put them to work to get you to eliminate that risk so you can hold on to maybe something bigger. And then you could consider other ideas. If you don't have an idea that supports that says, oh, this is going to go up for 2 or 3 days. If you don't have that idea, don't do it. Don't cave and say, well, hope is a strong thing. What you should say is, we're looking for profitable trades. All the time I'm like, oh yeah, 2,900. You hear me say that, 29, 29, 29. Why do I say that? Because I think it's going to go to 29? Absolutely, I think it's going to go to 29. And I'm going to get out way before 29. You kidding me? The last 2 or 3 points in every move is the worst. You take your money and you go. And you be happy that you figured out what was going on. And you come back tomorrow with your head on straight, trusting yourself, and you do it again. You know what's going on. Even if you don't trade, you know what's going on. It's like drama. This is the most dramatic. I mean, think about this from like a dramatic perspective. We had a little fight down here. It was just like a squabble. We had laziness. We had eagerness. We have apathy. We have hope. We have people being aggressive. We had this patience, like it was like patient predators. The bulls are like waiting. This is a very dramatic thing. And if you can keep up with it, you can enjoy the drama and make bets on the social aspect. I think you guys are screwed. That's where you make your bets. You don't make bets on risk reward. That's dumb. And entries, that's dumb. You make bets on people. So that's my 2 cents. I personally know exactly what I would do, because if I were still holding a trade, and I can't say what I would do because I'm not holding a position, so that's not fair. But if I was still holding a position and if this did move up, I would likely take 10 points because they pissed me off. I don't like holding on to trades that we're all laggardy and lazy and bumped along like idiots. So if I had gotten in, I probably would have tried to get about 32, 33. Let's say 33. If I had, I would probably have a take profit at 43. And I would be saying, I'm going to take my profit because I figured out what was going on. I'm going to make the money from it. And I'm going to be done. And then I would follow along after I got out and make sure things still work out so that I have my head in the game when the market reopens. I know what's coming. And I'm like, oh, okay, I remember what happened. I mean, like right now, you should pick up. Yesterday was shenanigans, and the bulls did some weird stuff. The bears cheated. It was nuts. And then they had this great play into the close. They let it drop. Today it opens up, and the bulls are all predatorial, and the bears are like, yeah, we're going to win. And it's like, okay, bulls, you guys are all set up. And the bulls are like, meh. And it's like, what the fuck? So this is getting really dramatic. Like, it can be exhausting. By the end of the day, you know you did good if you're like, guys, I need a nap. And not because you were trading. It's the stress, because that's, markets are designed that way to test your emotional limits and stuff. Because that is the hard thing. But writing an algorithm that picks a high and a low is the easy thing. The hard thing is to have a backbone and a character and use your brain and take a risk. That's so hard. It's so hard to do, because you have to say, I have an opinion and it's mine. And then you have to put money on it. And that is really difficult. You should be exhausted from the emotional stress of trading, not from the trades. It shouldn't be the risk that kills you. It should be keeping up. That should be killing you every day. Like, I always, as soon as I'm done trading, I go plop down and try not to fall asleep, because that makes me look lazy. But I take naps all the time because it's exhausting just keeping up. What's important is that once you get to that zone where you can kind of keep up and you're like, I see what's going on, you can start making rational decisions instead of turning your brain off and following some stats. And your rational decision making when it comes to social situations is incredibly intelligent. Incredible. If you can get to that point where you feel like you really see the players, you'll start making choices and you'll be like, I just thought it was a good idea, and you nail it. And it's way better than the crap they tell you up front when you get in here. You remember when you started trading, this is a trend line. People buy when it bounces off the trend line. They don't tell you that it doesn't work, but they tell you that. They're like, oh, this is a trading strategy. You create an emotionless, turn off your most intelligent part of your brain. your feelings. Shut off the best part of you and be a dumb robot and obey the statistics that we have complete control over. Of course they're going to say that to you. These markets, you know how much money goes through one futures contract? It's like $2 trillion. Of course they tell you to shut your brain off and be emotionless. Trading is about being emotionless so that you don't have your intelligent part on. We want you to be a dummy and follow the numbers we have complete control over. Oh, and do risk reward. We want to know where your stops are. So, always like a 4 to 8. That way, every time we see an 8-point profit, we know you got a 4. We know you got a 4 down there. Maybe if it's 20, you're going to have a 10. Actually, if it's 20, you're going to do 50 because you're dumb. And your brain's turned off, and that's important. It's just like, it never worked. No one in here can tell me it worked. No trader has ever told me any of that crap ever worked. It's because the best part of you is emotional. It's social, and you need to see the people. And then all of a sudden, you're brilliant. You're like, I see what's going on, and it's like, yeah. And if you were in a room of people, you would see it just the same, and you'd make amazing decisions. Unless you're autistic, I guess they don't make great social because they don't feel it, but it's not that they can't make choices, I don't know. Maybe an autistic person would be great, but they'd be great for a different reason. They wouldn't be like, oh, this guy's screwed. They'd be like, the numbers. And I'd be like, you got me. I don't know. I think I'm rambling. This is taking forever. These bulls are taking their time. Taking their sweet time. You can see what's happening here with tension. See that? Look at that. We're up to 12. I was thinking like positive 30. That's like here maybe plus 30. We get there. The bears are going to be pretty happy with that. And what ends up happening is that you sort of go, so is this just price only? If price rises while tension goes down to that far, then yeah, the bulls got price up, but the bears got control, and sure, short term looks good, but over the long term, you don't want to give the other side of the market control. They could start a trend. You don't want that. Trends are no good unless it's your trend. You want it to be your trend, not their trend. So, yeah, this tension's moving down further than I think I like. Again, I just want to smack the bulls around who are in control of all the money. But then they might have a game plan that's just beyond me that I obviously can't see. Or they vote. They'll vote on what they do the day or week before. They're like, here's what you have to do. Everybody vote. They go to board meetings. That would suck. You have to sell tomorrow. What if I don't want to? You have to. That's stupid. You can see that. See velocity right here? See how that? It's still making it, and decay is sort of cooled off. It's just sort of chilling, but velocity's kind of got this. If I just drew straight through, maybe more like that. More like right there, like 12:15, 12:30 Eastern. Get a test 12:30 Eastern for the bears. The bears like, okay, 12:30. 12:30. We'll wait for that. We gotta. I think the trick here for the bulls is to just optimize your profits, and that invariably means converting the other side. And when I talk about conversion, I mean whatever it takes to get you to move your stop. And the easiest way to do that is to push you into apathy. It's that moment where you say, I'm right, or I was right. Oh my gosh. Okay, I'm right. And then you just delete your stop because you're dumb. And then you get all done after getting liquidated, and you say, why did I do that? You ever said that to you? Why did I do that? It's because you got used. It was because you couldn't control your own emotional state, and the market controlled it for you, and they will. And I don't think it's a function of Brownian motion. I think it's a function of effective profit taking. Sure, there's some Brownian motion in there, but it ends up that Brownian motion obeys the fact that the market goes where orders are. And those orders show up on the books because they're put there. Because you deleted your stop, your margin call order got put in a nice big fat pile. Your broker piles up the margin calls at a level. That's why they say, that's why if you get margin called, they don't go to this. It's not like, oh, 5% or 10% or $100 left. They give themselves this like area because they need to put your order in with everybody else's margin call. Call down and say, oh, we got 150 contracts up here. They're margin calls, so there's a guarantee that you'll get the fill. They cannot fight back. And they go, oh, okay, thanks. Here's $50 or whatever. I don't know how much they pay for it. And they fill it and they ram the market up into your order. You get stopped out. The market moves a little bit higher and then turns around. And that's important because if you get high ticked on a margin call, you can sue. Did you know that? You can sue. You can sue off of a high tick margin call because it implies that they manipulated prices just to margin call you. And I need to go check on the court case. I remember reading a court case about it once. That you get high tick margin call, they could be in trouble. Oh, I got someone at my door. Hold on. All right, I'm back. So I'm going to take a break, but the expectations right here is to see this grind up and sweep out those bears. So watch velocity. This is the place to keep your eyes right now. I think decay is pretty well set, but this is going to be the next event, is getting velocity up, sampling those bears. And the goal here of the bulls is to make sure that price can push those stops up as high as possible, and hopefully we'll see when we get there, but fail these bears on the way up. And so I anticipate the price should maybe take its time. We get up, we get some sort of pop, and keep your eye here on tension. Once the bears unwind their position, tension will curl. And that is what I anticipate coming up over the next 30 minutes. So I'm going to take a break, and we'll see what happens in like an hour. All right. I make mention. Back on the stream. There, now everybody knows. Okay, so what's coming up here is that velocity test. Remember, this is the thing that you guys are supposed to be keeping your eye on. Let me get this thing set up here. Okay, this is the thing that we want to keep our eyes on here. Oh, still got markings. And right here, we're getting that test. And now remember that there's a sequence here that goes. First you get the signal. We'll say signal 0. So signal 0. Then you get the volume, or I don't know why I'm adding zeros to everything, but then you get this volume. So if you see the signal first, that's not quite the way you want it. You want it to see the signals and then see people like knee jerk and try and capture the idea that they see. So coming up here, remember that we are looking for how the bulls are running the bears. And we walked through all morning this morning. It was very frustrating, up and down. We saw what was going on. And now we need to take into consideration how this is going to play out. And I think embodiment's going to be an okay model to use, or that you sort of consider what it's like to be a bear. But one of the things that I think is, let me switch here, turn off this. There you go. So we have our inversion. You see how it came up over, tested. This looks much better than what we had before. So we're seeing those sellers coming in, right? Selling. They keep the tick down and they help pay for the rally. So that's great. That's great for us. That's what we wanted to see to get this to move higher. So now we're looking at tension, right? So if the bears unwind their position in any major way, we're going to see that in tension. What's really important to keep in mind is that if you are able to get into this and to run it, that what you're trading is an idea. You're trading the idea that the bulls are defending, the bears got just a second. Okay. The bears are in an apathy state. That's a really big deal because that means that their ability to feel the pain of things like this right here is dramatically minimized. I mean, think about the last time that you, and I know you've all done it, got into a position, probably shorted, I don't know, here, because that's, and then you're sitting on it, oh no, it's going to save me, right? And your stop's sitting up here, it moves up and it pops through, but your stop was actually, you moved it up before you moved it. I know you did. And then it broke back in and you're so safe. And then it went back up and then it just, and then before you realize that you can't exit your position, it's like closing orders only. Look at us. And you move your stop out of the way. In fact, you just delete it altogether and you're like, well, it's up to the market now. If it comes back down, I could make a ton of money. I'm just going to not even think about it. And then instead of not thinking about it, you sit and stare at it while that it goes, and then poop, it takes you out and you go, ah, and you just, ah. And the phrase that lets me know you're in this, of course, that's the words. Those are the words you say, of course. So this is kind of the thing that I think would help us see that the bears got into an apathy state and that they're, trying to hold on to it. Right here, we're getting the sample. So here we go. There's the trapped order. So we got the sample. So our bearish move. Now this switchback, it kind of looks like a switchback. It was a little fast. Where's my drink? I think I drank it all. So it looks like a switchback because it popped up and went back down so quickly, but it was a little fast. The question you want to ask is, that was positive, or it was a positive number for, was this a 1 minute chart? So maybe a minute, and then seeing it go back negative. Does this idea inspire people to hit the sell button? Are they like, oh my gosh, it was positive and now it's negative. It's like, so going to go back down, it's going down. And I think if it's really quick like that, I don't think it's going to knee jerk a bunch of people. So don't usually look at things that are just really fast back and forth, even though it's marking it out here. This is the one that I'm watching. Our orders are right there. It's at 1%, so it's almost finished. This is going to present liquidity to the bears. This is going to be very telling right here. We have this position right there, which you could draw a line over. In fact, I could do that. We'll mark out, let's see, let's say about here. See, where's the close? I'm going to say right about there. That's going to be these guys, and then we can mark out the bulls are absolutely right about here. Okay, so we know where probably the major players are sitting right there, and we're up, turning them upside down. The way that this plays out is essentially the way that most of us have experienced more than one time and wish we had never experienced, which is it just never comes back. And that's what we're looking to see. Now that the market has them upside down, we got the market to move up. It was a good move. This was a somewhat difficult trade because if you remember, the laziness of the bulls was driving me nuts. It did end up working. It never got a new low. So if you did catch it, great. The question you're going to have to be asking right here is, do you think that the bears will show? And how do you answer that question? This is a big deal because we're getting one of those big, huge arrows, right? Remember, you get these big arrows and they seem really big and they're counter. So if you're long, you're sitting there looking at that going, oh man, that's a big counter trend arrow. How do you work through this logic? There's your position, there's your sample. Are they going to show up? Well, the easiest way is to look at what they want. What do bears want? Bears want to pump this down as far as they can. What will happen if the bears show up right now? And the first question is, have you seen bulls fail today? And I think we saw the bulls patient, and they still have struggled to really impact tension. But the 30-minute tension, the daily tension, they've been able to keep up. You see, they've been able to keep that up. But I think it's because they're letting the market ride against the bears. Contextually, I think this is a very reasonable thing for them to do. So it's sort of a patient game. While this looks like it's rallied, in my opinion, this really hasn't actually moved yet. I think this is still very close to where the bears are, and I think the bulls are still in a waiting pattern saying, well, it's favorable, sure, but do you want to put a break even on it yet and be concerned and say, at this point, coming back would have made my idea wrong? And I think right now we're at sort of a pivotal point. These bears are about to let us know what is probably going to happen. If the bears show up, let's say they show up and hit, and we see price just go. The question that I'll be asking myself is to say, what are they expecting to get out of today? What footing can they get into the close? How do I look at the footing? Well, I'm going to look at 30-minute tension. I'm going to say, okay, so this is sort of marked it out. Okay, to there. What is that? Plus 30? I mean, that's what we were thinking earlier, like plus 30 or so. If bears do nothing, it looks like they might get plus 25 anyway. So if they were to do that, how could they get more than plus 30? How do you get, and this is the question you have to learn to answer, how do you get tension to curl further? You liquidate the other side. So look at the market, look at where the bulls are. They're going to have to push it again down to 29, 24. They're going to have to get it from here down to here if they want this to do more than 30. Otherwise, they're not going to liquidate the other side, and they're not going to get not much of an advantage. And there's 2.5 hours. Plenty of time. It's doable. But to understand the motivation of why bears might show up here is to say, what do you want? And if they did that, I would assume that in their heads, they're saying to themselves, we're going to drive this out down the low. That's what we want. And I think there's one big roadblock they have in the way, which is daily tension. You push this down, I think daily tension is going to hit zero again. They're going to run into a problem, and the bulls have a really good chance of showing up because they've been doing that. So it's like, why would they change their story now? Sure, they could. We're trying to model what are the motivations of bears to show up now. The second is, do we have evidence that bears have been successful? And, they haven't been completely, they were able to hit. They have been able to get tension down. So it's not that the bears have been complete failures, but emotionally and the way that context worked, they've been having sort of a hard time really taking out the bullish position today. Yesterday, super motivated. But today, I don't know that I'll call them successful, but technically they did impact tension and they did hit here. So it's not that they've been failures. So you have to answer this question. Are these bears going to show up? Because if you don't answer this question correctly, or at least have an answer, then you won't know if you should hold or close. Because if you think the bears are going to show up now, you should absolutely dump. You should get out of your long because this is the moment where they're going to pick up liquidity. If you think the bears are done, then you should not. You should say, I'm trusting my narrative. I think I know it's going to happen, and hold. And then, maybe we see something like this and then it continues up. But if you think they're going to show up and you think this makes sense, and this is all about the rationality of this social situation. In my opinion, the bears are not the rational opinion. Bulls were a bit of a pain earlier, but it was just laziness. It wasn't that anything really broke. So I think the bulls have control of daily tension. I think they have the bears in a good spot to run them much further. And so I think it makes a lot more sense for bears to do nothing, to say, you know what? We got tension down. If we do nothing, we'll probably get it to here. If we dump a bunch of extra money in here, it will just accelerate the rise. I think the bulls have a pretty good grip on this now. And I think right now the bulls are definitely looking at this. Oh, that's not it. That's not it. That's it. Anyway, like 20. Where are we at? I'm all lost over there. So 29. There we go. 296. If I can write. Okay, 296. So they're looking about 296. So they're still looking at this, in my opinion. Does that mean they're going to get there today? I don't know. But I think that's what they're looking at. If I was a bull and I had a bigger account, and I was like, okay, if we run out these bears, I think that's where it's going to head to. And if they get it there, we could still see tension just sort of do this thing and get, a positive 18%. It's still a positive 18. Bears are not completely miserable. Now, the bears, on the other hand, are like, well, do we want that? Because the bears would get totally liquidated if that happens. But I think it's a better case for the longs. I think that the way it's set up, not necessarily that there's bulls here, bears here, bulls here, bears. It's not that configuration. It was the way that it played out as we went through it. It was like, gosh, these bulls, like they got a better situation. These bears are enthusiastic. We're going to trap them upside down. This is a fist fight, but not really, because, the bulls had better control. The bears were too enthusiastic. They got emotional. It was just like, and there was a few minutes in there where I think I vented a bunch because I was just so irritated with the crap they were doing. I didn't think that this whole dip, I didn't think should happen. It was just, anyway. So I think there's a little laziness by the bulls, but I think the bulls still have a little bit better case in terms of control and potential. What would the bulls want? So in terms of tension, and so whenever I talk about what they want, I'm always talking about possibility space and tension. So I think what the bulls would like is to see this, it moved on me, is to see it slowly move up and then, maybe a curl, close like right there. Sure, that'd be great, 10%. Because, again, we could see a gap up and they could be back in control of everything tomorrow, or the next time the market opens, next week. So I think if the bulls had everything they wanted, that's what they would get, because that would put them in a prime spot to trap in anyone who shorted through here thinking, oh, it was negative numbers and possibility space was down. I think that would give them a great chance to trap those guys out. We could pop the prices up, open it here and then run everyone out, just never let them. Or usually it's something like this. You get it to run up, comes back down, and then up higher. It's like something like that usually when you have a trap like that. So I think that's what the bulls would like. So how can we verify one way or the other? So we're going to sort of take the what's happening now and the bifurcated possibility streams, and figure out which one's getting validated throughout now into the close. And this isn't about one way's right, the other way's right. We're going to make an expectation. And this is, if you followed me, and I know a lot of people, that the fundamental rule here is essentially the scientific method, which is you make a hypothesis, an expectation, and then you collect data points that either verify or discredit, and then reevaluate. And you're constantly reevaluating. You should never, ever stop having an expectation. There's no point, whether it's in trust, looking at data, you should always say, I expect prices to do this. I expect samples. I expect this. You need to build expectations and then watch the market either validate them or not. And then if they don't, go back to your hypothesis, fix it or look at it, and then build that expectation and do it again and again. And eventually you get to this point where you're like, oh, my expectations just keep getting met because you kind of picked up on the right stream. So right now, my expectation is to see this sample here struggle right here. I expect it to sort of, something, but I anticipate it's going to move up. And I think that right about here was the first time. So we had the bears show up and they were able to run the market to about here. So I'm sort of thinking that this is about the spot where the bears were able to take this chunk. And then right about here was when reality started to set in and the bulls picked it up. So I think this is probably the spot where the bears are going to be like, yeah, anything on the other side of this is just like, there's no way we have control of that. So I think it's going to feel very safe to keep your order up above. It looks like 296, maybe like 296.50, like up in there. I think you're going to be saying, oh yeah, I like that, 29.65 or something. They're going to say it feels very safe up there. So that the way I'm picking this is not some technical. It's that I'm looking at the events and I'm saying, well, if I was a bear and I was doing, where's safety? Like, what does safety look like? And I think safety would be like, well, here was our section, right? This is theirs. This is ours. So no way you're going to get up there. And I feel like that would be a very safe spot. You can say, well, just stick your stop up there. Don't worry about it. So I think that's the scope. When I talk about scope, I don't mean it's going to get there. I think that's, you have like the telescope, you're like scoped in on what's your distance look like, what's a time frame, like what are people looking at. So if we can get tension to essentially not move down here, I would love to see the bears not hit, because that would validate this hypothesis. In my opinion, we still haven't really moved out of the difficult time. That's why I think that if you rode this up and you're not quite keeping up with the narrative, it feels very off to you, this could be a good spot to take profit, because we're getting a counter signal. We're getting bearish liquidity showing up. So if you don't trust the system, you don't feel like this is something that you understand yet, this is a good spot to jump out, because it's the first counter signal and it can provide you a good exit. So if it does turn out things go down, you can walk away with some profits and feel good about it. And then review. Make sure you go back and review everything that happened today, because this is a really big day. I'm trying to tell you guys like a lot so that you guys can rewatch this video, see how I think, because it's not important about, like detecting liquidity. I get questions about how do you use this tool and stuff. And you have to understand, it's not about the signals. It's about the way I think. You have to restructure how you think into this way that allows you to model who's there, so that you can understand what they want and where they're going. And then things start to line up, and then you can start using your other tools. So right now, I think it makes more sense for the bears to do nothing. They've gotten their 30-minute tension. If they try to push right now, they're going to run into daily tension. I think that would be nuts. It would essentially mean they're dumping equity into the market just to get folded over by daily tension, which bulls have shown they're willing to do right here. They're willing to defend daily tension. So they pushed it down. Bulls would probably show up again. And that would just be a stupid move. Like, why would you do that? So I don't think it's rational. That's the point. I think it makes more sense for bears to go, no more, please. And to just miss. And then we see this move up. And then, we continue up, and then you got the inversion you see right here, still holding together. And you'll know it. You'll know the inversion is, I call it cleared. It's the word. It's just a word. It means that there's a new high on the tick after it's inverted. you'll see it push up, and then this yellow line will move up to the new one. And then I'll be like, it cleared. And that means that the way I take cleared, all the sellers were happening, but then all of a sudden those sellers couldn't handle it and they turn into buyers. And the amount of sellers turn into buyers all at once causes the tick to push a new high. And so I'm like, oh, well, they stopped out. So there it is. So I'll call that cleared. So if you're watching that, that's how I treat that. So we could sit here and look at tension, and tension sort of had this gradient to it where it's sort of moving down. So if it continues at that pace, we could be a little bit lenient and be like, oh, do bears impact this? Well, it's kind of doing that anyway. So I want to see either bears actually impact it. As they move down, I think they're going to, remember, it's been true. Bears are going to have to do a lot. Oh, yes?
TV.
Sure. I need to set up a TV. Just a second. Okay. Got the TV set up. Don't you worry. Okay, so right here, you can look at this. You see the velocity? It's moving up. So it's it's not amazing for. It's still come down. We can still see a sample come down, but you can see velocity sort of moving along here. We got to watch price. So I like to watch these ones. So 29.42. A hit might be 29. 30, 38. We'll say about 4 points. So a slide down about 38. It's back to that 38 number. We keep just seeing 38. It's just like, I'm so tired of 38. If they hit, so we can keep our eyes on tension as well. Can these bears come in, hit, impact tension? And then if they do, you say, well, up next, daily, they got the daily to run into. So I still think it's more reasonable for them to not hit, but we can't say they won't. It just, I think under the context and the way things are set up, I think it makes more sense for them to not hit. And the market needs to figure this out. It's part of the discovery process where we give all the sides a fair chance. And it needs to be a fair chance. And I think this is just about as fair as it gets because 30 minutes down, we're getting a sample at or near the highs, seeing it move down. So here we go, getting it to move down. Keep your eyes on tension and remember what this means. So you got to sit here and go, what does it mean for bears to hit in this moment? You have these bears who have got turned into apathy, getting another spot. They're like, bam, hitting, trying to hit. But the scope of this position, I think if you're going to really advance like this, like that curvature is suggesting, this needs to do that. And is that really what's going to happen? I mean, is that the kind of thing you think is going to happen? And this is a question you have to ask yourself. I mean, we can model what they're going to need to do to really have an impact for this to be worth their time. And we can look at what's happened, but it's just important to have an expectation and to reevaluate that expectation. So looking at this, all right, we got down to about the backside of where kind of thought those bears would be sitting, the backside of their position, which isn't too bad. I used to call this playing around in your stop, where your position would go upside down and the market would just sit and it would never go positive. And the reason that they can do that is because they know that you will never take a position that you stupidly held on to and take a break even. You will always assume that a winning trade that went negative is going to win significantly more than the first push, because that's how humans are. So we can bring it down to actually your position. You won't break even out because humans are just not that bright. We think that we deserve all the money back and more for our hard work. Okay, so we got this to move down back at 29. I would love to see this start to just inch its way back up and push through and just grind. I think that a grind would be probably the best thing that they could do, the bulls could do, excuse me. And that would get tension to sort of cool off. And then as it pushes higher, we could liquidate them and get tension to curl. If the bears are going to do something, again, I heard somebody talking about President Trump running off to a briefing room. Maybe he's going to bombshell the market. But if I know anything about Trump, he's not a big fan of doing that. He likes to bombshell the market up. So, well, I don't know. We'll see. All right, so 29, 40, 50. Now, if you're in a position here, or let's say that the 32, we'll say you got the 32. If you're holding onto a 32 position, how do you manage in your head dealing with this? Well, you need to figure out what idea exactly you were playing. Were you trying to play a push all the way up through the high? It's not even the profit target. You really shouldn't think about profit targets ever in this model. What you should be thinking is, well, what was your objective? If you were saying to yourself, well, I got into this trade thinking we're going to take these guys out, then what you're doing is you're remembering. So at this point, you should be remembering the guy or the girl who took a trade here. And you say, I remember that person. I think they're intelligent. I like their strategy. I trust them. And you should then ask yourself, what is it that person wanted? What did they want? And you should stop at this point. I believe you should stop trying to assess new information. You should get the model that this person wanted, this past you, and constantly compare what's going on in the market as sort of a servant to that person. You say, well, is this what they wanted? Is this what they wanted? Is this what they wanted? Is this it? And the reason for that is because that's the way that you're going to express trust in a trade, is to be holding while that you trust, constantly saying, no, they're the credible one, I'm holding. And your job is to say, well, what did we want? Do you remember what we wanted out of the lows? If the bulls were going to take this up, we wanted to see the market get up there, grind its way through. We wanted to see the bears fail, and that's where we're at now. And I don't think that this is a successful move. It moved down for sure, but look at tension hasn't really moved with it, so it was sort of a price only move down. So that's okay. Tension is it almost looks like it's flattening out just a little bit. Give it a minute. And so I think that according to the past version of ourselves, this is still moving along nicely. It's the way to cope with counter signals in a trade as you hold them is to constantly be referencing the past version of yourself who took the trade, asking what you wanted. Never sit and go, well, past version of me said it was going to go up here. So that's the wrong thing. If you take that away, shame on you. If what you need to be saying is qualities, what was this person looking for? They were looking for, a grind up that was going to trap this group. What were they looking for with tension? They want to see tension move up and close somewhere where that potential for gapping up. That's what they wanted. So as long as the market continually validates those ideas, then you continue to hold to where, in my opinion, you're just basically going to be looking for where these guys liquidate, which is going to look like this. It's going to curl. I mean, let's take a look. Let me take a look so that you guys can see what that looks like. Just something that I remember. Let's see. Well, we had the bulls do it right here. I mean, well, no, we didn't. We didn't. It was just the bears came in and hit. And I was on vacation. I usually I can like scroll back, but I sort of missed a couple of days being out of town. But it would look something like, here's a spot right here. So you see how it was moving? It just boop. I mean, that's the kind of direction change. I'd be like, okay, there it is. I would even accept just this kind of thing, just a little move up that just suggests that there was an impact market wide, and we saw a sweep up. So, okay, so look at it. It's sort of looking not too. You see that? So I don't usually. I think that if you have to zoom in on tension, if you're just constantly zooming in and looking at it, you're getting too close. You're getting too close to it. You need to step back and say, okay, just what were you looking for? Okay, so here we go. They're doing the rational thing. I think this is the sensible thing to do, which is nothing. And you can see this starting to curl up. And so if this can sweep up, like that, we get a curl here. You could say, there they are. They liquidated. And at that moment, you say, that's what I was looking for. I wanted to see that. Get out. Take your profits because you got what you wanted. We wiped out the other side. That's best case scenario. That's the spot where that you would jump out. Is when you get what you wanted, which was to see some liquidation. And oh, here we go. So let me switch this over here. You can see, look, it popped up. So we got a new high. So right here, it looks like that the bears are like, not sure that we like what's going on here. But it also shows, to me at least, that the bears are failing to hit. So what can happen in an inversion right here, where that we're looking at this, is that the market can reinvert, do it again, or it'll just come back down. So I think that we're getting basically everything we wanted for the bulls. I think this is a good spot to start to consider what getting out of your position would look like. Because in my opinion, continuing from here is going to require more analysis. Meaning that the trade that started about here wanted to see a move up with tension curl. There's that curl. You see it? Do you see the curl? Actually, I'm gonna clear that. I'm gonna close that. I'm gonna take a screenshot of it here. There we go. There's the curl. So I'm gonna screenshot that and I'm putting it into the Discord. There. That's the curl. It's curled. See that? Okay, so now you know what it looks like. Now, the way that you could get around, not get around it like it's something to get around, but where is this going to go? Could you hold for more? Well, we just had a bearish sample right through here that's falling apart. Where would these guys liquidate? these guys, it looks like, are likely the ones letting go about here. That first group is probably dumping their position. It's obviously not working. The bears obviously didn't hit. It's trouble. So the next group just picked up the baton. So these guys right here trying to fill a position. It didn't work. It's moving up. It's curling as those guys dump. So we've got a second group of bears who are now, oh no, we just replaced those last ones. Oh, dang it. Well, where are they going to liquidate? And I think similarly, you know, this is the spot I think that they're wanting to hold on to. So again, maybe these guys think they got something. I mean, what it's going to take to get this down is going to be a lot. And I don't think it's a rational thing for them to want. But don't give in to the temptation that you have some amazing position from here. It's up so positive. So I'm going to hold because it's looking so good. You should take profit when you got what you wanted. You predicted this. You said, I see the bulls, I see the bears. Here's what I think is going to happen to them. Okay, so I think this will probably keep going. I really do. I know for a fact I would dump right here. And my reasoning is that this is what I wanted. So unless you're going to use a more complicated analysis, which is to look at these bears here and these bears here and sort of look at where they probably liquidate, which is going to be up here somewhere. And then consider what it means to have tension curling up. Start modeling out more that's going to allow you to hold. Remember that this is now a new trade because we got everything we wanted from earlier. We got it all. We got everything we wanted. It was a little more frustrating than I wanted. And hopefully, hopefully it wasn't too back and forth. I was just venting. But that you guys saw, you know, the narrative, and I hope that a lot of people are able to take advantage of it. But that we're getting what we wanted. And it's more important that you take the trades you expected, you exit when you get the things you want, because that means you're going to come back having trusted yourself and done everything. You're going to come back next week just good as can be. But if you were to hold on to this and then it suddenly went sideways and toppled, you're going to be in a real pickle because it's going to put you in a situation where that you betray yourself. And that's going to be one of the hardest things to deal with because you're all by yourself at home. So you're going to second guess. So I think it's a good idea to take profit when you get what you want because it's the principle and it will hold you together. You can do this every day. Sure, it could continue. It probably will continue, but hopefully you guys understand that the concept we're trying to get across is that it's more important to do the thing that you set out to do and to trust yourself and to prove that you can do and you can understand and follow along and take the trade that you saw and it worked the way you wanted it and it went where you thought it would go. That's way more important than an extra 10 points, but just way more important. So that's my thought on this. I do think there's a very good chance we continue. Like I said, the bears came in, showed up. It's curling. It looks like it's going to go and just pressure these guys as far as we can. They absolutely failed here. You can see that, right? I mean, hopefully everybody sees that they failed. It was like this little price move, but yeah, attention didn't care at all. So this curl is telling us that these bears dumped. These bears likely picked shadow traders, if anything, picked up some. They're now stuck in. They're going to pay the bill. We can take a look at tension, and you can see, I had an accident. You can see it's pushed up to a new high. So we're getting a really big shove here. So for me, this is a great place for you to dump. Say, I did it. I understood. I followed along. Caught it. It was predictable. This wasn't an entry point with a take profit. This was like, I understand what's going on. I'm going to take a bet on these people. I'm going to ride it until I see those people get just destroyed. And when I see that, I'm going to get out and say, I bet and I won this hand. So that's what I think you should do right now. I'll leave this up and running. For me, this is over. At the end of the day, I got some stuff I'm going to do here. Otherwise, it'd stick around. I'll leave it running. I'll come back at the last about a half hour, 45 minutes or so, somewhere in there, and go over the events that happened. The thing you need to watch, keep your eye on tension. It's popped up. That tells us, though, that a big chunk of bears just dumped their position. So also look at your possibility space. We have a decay retest here. That's a last ditch position for somebody trying to get in. So Otherwise, we could get bulls here, we could get bulls here, bullish sample, bullish sample. Otherwise, if this retests with decay, we'll have a bearish risk reduction. And that would suggest that the bears are desperately trying to get in, which I'm not entirely certain that they are, but it would be a good Hail Mary pass. So the question right now is, how far up can these bulls get tension so that we could potentially have a gap up and run and trap all the bears today out into next week? So that's where we're at. Keep your eye on these things. Try and build an expectation about what you think price is going to do, internals are going to do, people are going to do. Watch for that, reevaluate. All right, I'll be back. All right. That took, you guys are stream. There we go. Okay, so that took less time than I thought. So that was a pretty good trade today. I think I would give that one a medium complexity because the trade that set it up meant that you needed to know about those who had traded in order to execute or to get into a trade. I would give the entry a medium because it required some irritation to get through. So that's how I classify that. I thought right now, if anyone wants, you can ask some questions. For me, that's the whole trade for the day. What's going to be going on the rest of the day is data collection. I'm going to be looking at the things that are going on and keeping track of the events so that I can get an idea of how that's looking going into the weekend. Because going into the weekend means inherently means holding on through a sort of scary time. I can see the YouTube chat now. I didn't have it up before because of real estate on my computer. So you guys have questions, you go ahead. Ask about the insanity. I think only like 8 people watching most of the day. Yeah.
These flies or I see ears and fires.
Okay. Peanuts. All right, so a really quick recap here, just to go over the things that happened and how this sort of worked this morning. Oh, so I got this going. I want to make sure I'm in the trade community. So if you guys have questions, okay. So essentially, this morning, you remember, we had a bearish sample right about here, right off the open. Remember with that. And that one was like, take it with a grain of salt because it's right off the open, so I'm always a little more skeptical. Then velocity was positive and then immediately negative. And I thought that was sufficient to get people to trigger, and that gave us a bullish sample here. And then price, they were sort of sitting and waiting because they wanted to see if those bears would come in and get trapped. And decay was moving positive, which suggested positive energy in momentum, and that triggered these guys, and that gave us a second bearish position right here. Then the market pushed back down. You could see right at that time we had these bears trying to get possibility space down through zero. They're trying to get daily and 30-minute tension through zero in this dip. And you could see that caused trapped orders. So we have another buy position showed up here. So this gave us this interesting situation. What was important about it, I think, was that these guys were being patient. These guys were being essentially enthusiastic. I'm just going to write eager. They were very excited about being able to win yesterday, and they came in today thinking that it was going to be easy pie. They're very enthusiastic, push things down. As soon as they pushed it down, they ran into this right here, tension getting to zero, and the bulls picked it up. Then the objective was to turn this eagerness into hope, which happens about here when it moves back up onto and through your position. And they converted them into apathy here with a sweep that validates your hope. Once your hope is validated and you're like, okay, good, you stop caring. At this point, we saw a deeper dive than I wanted twice. I thought that was very irritating and unnecessary, but It didn't push out a new low or anything, so this was just very frustrating for me to see such, I think, sloppy work right through here. This was difficult because I don't think it should have happened. I think they should have turned the bears into apathy and drove it up. But anyway, I thought it was bullish through there. I thought that made the most sense because these bears had been turned to apathy here, and we knew that they were primed to get taken out. We also knew that the bulls showed up and defended tension and were, patiently waiting like predators in the background for the bears to get in trouble. It took some time, which is okay. I just didn't think it should move down that far. And finally moved up and right into here. These bears who had been primed into apathy basically unwound, and you can see that here in tension. The bears did everything they could to try and gain control of possibility space and ended up, their enthusiasm got the best of them, driving it up, tension pops up, and that was the end of the trade. It was the idea that the bulls had a better position and the bears were being stupidly emotional about it and got converted into apathy. That drove us up and knocked them out. That was the trade for today. One of the things that happened during the trade that was important was how to deal with the counter signals, which was mostly these things here, maybe somewhere here. The way that you deal with these counter signals, which are the things that scream at you that it's coming back to your position and stuff, is that as soon as you enter your trade and you have the idea that you constantly are referencing what the person who entered the trade wanted, not you, and you make sure that the market is constantly giving you those behaviors. It is not about profit targets. You don't say, well, they wanted this number, so I'm holding for that. Never do that. You should sit and go, they wanted to see, and right here was they wanted to see the bears fail, and that's what we got. I went over some other analysis that I think supported the case that the bears would fail by virtue of the fact that it would take too much work to really impact tension in a meaningful way, and it would end up with a daily zero test, which would just blow up in their faces. So that ended up being a rational bit of rationality there, as well as trusting that our previous self wanted to see that happen. So going into the close, what does everybody want? Well, at this point, I think what the bears should want, my opinion, is as high a price as they can get. I mean, this really fell apart on them, and the best thing that the bears can do is get into, somewhere up here, get into the best possible position and try again next week when the market opens. Hitting the market down right now, we have failure here, and this will cause resistance because when if price came back down to there, the market would have to say, oh, how are we going to pay these people? And there still may be some lingering folks from here. Most likely the place that will cause the most resistance would be right here. So this is where the major, I think, bulls showed up. Things were sort of clear. So that's going to be the spot where the most bulls are going to be sitting, and that's marked out right here. About 29.30. We'll say 29.30 is about right where that. So if the market comes down, yeah? It's drinking the juice. So the market comes down, that would be a place to find support. That's where the bulls defended tension. It's like that. So I think that the bears right now would just love to get a better price higher. Things didn't work for them. It was not going well. So in my opinion, the bears have sort of an upside mentality to them, but not an active one. I think that if you're a bull and you're a bear and you're still holding, yeah. So I would probably anticipate maybe some sideways through here like this, where the bears say, I don't know if we really want to participate. And in that case, you ask yourself, well, if they don't want to play, how do we go anywhere? We could move down and sample the bulls again, but I think that would, think about what it would take to do that. If we brought this down to sample, it would mean that price could come down, and it's not very far. And then all of a sudden you're asking the question, are we going to allow these bears into a positive position so we can sample the bulls again? Not impossible, just it's like, oh, I'm not really sure. I think that the best case scenario for the bears is to just step back, take a breath and say, all right, well, where do we want to start filling again? What do we want to try to accomplish? At this point, looks like tension's probably going to close about here. Maybe we'll say 9%. That means that the next time the market opens, if we gap up, that we could call this a zero test from below. It may be that the bears are like, well, let's see if we can get that zero test to work in our favor and topple those probabilities back towards ourselves. I could see that. I think that over the weekend, if you had just unlimited funds, the best thing you could do is try to come up with something that's going to bring equities down. Maybe it pops it down, and then maybe do something like this again, and that would, I don't know, price here, it gaps maybe down to here, right about there, and then it just sort of does this, you get in and then try and sell. So something like that, where that you can make it look like, oh, bears are finally getting it, but then you go up and you do open interest theft at the highs, and then you try and sell that back down while keeping tension below, something like that. I think that makes a bunch of sense here. I don't think the bears are sitting here going, oh, we're holding on to this, we're just going to hold on to this forever. I don't think that makes any sense at all. So I think that the bulls will likely keep nudging this higher and higher and higher. And if you're in short, well, God help you. You probably won't. God does not care about traders. So if it's going to go up, he cares after you're done. If you're in a trade, he doesn't care about your trade. That's what I mean to say. Got to say that correctly. Anyway, I'm just messing. So we can see that there's sort of a bullishness in the market right now where the bulls can inch this higher. And I think essentially what that these bulls are going to be after is just knocking out stop after stop. I can't imagine it would move very quickly. It's going to be arduous and painful. Perhaps into the close, just a bunch of market on close orders might pick up the speed of things in the last little bit there. But I think for the most part, the bears are not going to be doing. I mean, that was just bears dumped. They unwinded their position. It was not working. Now, looking into next week, one of the things that I think is a big deal is looking at your longer term perspective. So probably one of the best bullish situations that you can have when you're doing this is you're looking for a AAA bearish setup. So maybe something we get like daily tension down, it comes up to retest from below. 30-minute tension's down here, and it's down. And it's like, oh my gosh, this is a beautiful trade right here. Bears should get this, sell the zero test. And then bears just don't do anything, and the market just goes against it. And what happens is you get this sort of AAA setup, and that's not just with tension. I mean, you get this, the market internals also playing along. And you say, why didn't you guys take that? And what happens is when you have a AAA setup that doesn't get taken, you get this bullishness that comes in the market. Bulls just love this. They love it when bears just screw up. They just don't take the great situations that they have. And once that happens, you can have a couple of things that will happen. Sometimes they'll move a little bit favorable, and then sometimes they'll just be immediate bullish and ride up. I think in terms of a bullishness, like we're in a bull trend, that this is the kind of behavior that I want to see going through next week. I want to see a situation set up where it's just like the bears have the bulls upside down. The bears are getting everything is under zero. They have control of the market. And then the great trade sets up and they just don't show up. And you're like, what? And then the market sort of moves. And a lot of times you get one or two of those. And then finally, the major overall trend will take off to the upside. That's how bulls will likely win this battle if they're going to win. The way that the bears will win is that the bulls will also get a really great trade set up, something, AAA, things are just working, and the bulls fail. Usually bears come in after failure on the bulls' part. In terms of like, they get their AAA trade, it's sort of working. Usually bulls come in for stuff like that. And then they're trying to get it to go. It's just not working. It's just not working. Just not working. And the bears will just come in and I find those situations difficult because a lot of times after the bears take over the major trend, the bearish move fails, comes back, and it's just another beast. But I think this is important because we just saw the bears after yesterday have a difficult time. So the mentality here going into the weekend is that the Bulls sort of have control. I don't think the Bears feel like they've totally lost the game yet. They just, today didn't quite work out. So we need to see a really great AAA Bear setup sometime next week, see it fail, maybe another really great trade setup. And what happens is you get the setup show up and then it fails, and right after you just get bullishness. You don't get like a setup. You just get bullishness, like the second one or a couple times. And what that implies to me is that the Bulls have sort of positioned and they really have no confidence in the Bears. And that as soon as those Bears fail, they just start flooding the cash in to support their positions, because you don't want the Bears to jump out. You want to use them to do the work. So as soon as they fail, maybe the second time, or I've seen third and fourth time, you just dump that money in and it runs them out. And so we'll see that as it plays out next week, and be able to track those in real time. And those will be good positions to take with options or a spread or something like that allows you to capture directional movement that could be more like 2 or 3 days, or at least much larger. This type of trade was a intraday type of thing. It gave us sort of a scope, kind of like what they're thinking direction, gave us some context, a little conflict to take advantage of. So not a multi-day trade, though it does seem to lend itself to next week, how things might be looking as we go into next week because of the way tension's lining up, if you remember. So that's how I see things going into next week and the things that I'll be watching for. I think that the last 2 days today was actually a little bit better. Yesterday was awful. It got very noisy. It was like it just died off. Today seems like we got some good story. Everything worked out. We were able to pick out the narrative, see what was going on, take advantage of it, and it was good. So I think today is inching back into the kind of good trading that I like. So hopefully this made sense. Haven't seen any questions, but I only have like 8 people in here. Hopefully we'll get some more. I'm considering doing this on a regular basis where it's live streamed onto YouTube, and then I just let them distribute all the channels instead of Discord. I think Discord is okay, but it's a little confusing and it doesn't have as many bells and whistles. Anyway, so that's where we're at. If you have questions and you want to shoot me questions, I'll pop back on here and I'll answer the questions. Otherwise, there's not much to do at this point. The trade is over, so the market's going to have to sort of work through the bits and pieces and get to the point where we can establish some more conflict, which I don't know, an hour and a half, maybe we could get some, but I think most likely the market's going to just cool off. If something happens, I'll pop on and talk about it and how it fits into the narrative. So yeah, shoot me any questions you guys got, and I will be back on a bit to walk through the rest of the day. All right, so I invited some people in from Twitter. If anybody showed up from Twitter, you got questions and stuff. I know I've already gone over this, but go ahead, shoot me some questions, and feel free. It's not like we have 1,000 people in here. Okay, so quickly again, we're gonna just take a look briefly at the positioning in the market and a little bit of what happened. I know we're gonna keep going over this, but we got some people coming in, so I want to take a look at it again. So the very first thing that happened this morning was we had our bearish sample. You can see it was actually marked out pretty clear. It's covered up behind there, but there was some trapped orders. So this gave us a bearish sample. It was right off the open, so took it with a grain of salt. I swear I've said that like 5 times about that already today. It pushed down. We saw the negative numbers, and people see that, and then they sold in, and that gave us bullish. So we had a bearish position, bullish position. And while we were going through this, kind of picked out the bulls were being pretty patient through here. They were waiting to see what the bears would do. And as this pushed up, you see the positive decay, push positive. That brought in these orders here. And that gave us a second bearish position. Now we had the bulls kind of against the bears, and the bears were looking to try and get tension or the possibility space, get control of that. So at this point, I think that we had really covered what the possibility spaces were. We were looking at this, and the bears were able to push 30-minute tension and daily tension down. So it was a zero test, if you're familiar with those from tension. And that zero test brought in these trapped orders. And the bulls hit. They came in and defended the zero test. They kept the daily tension up. So they kept the control of the probabilities on the daily time frame. 30-minute pushed under, but still price responded and pushed up away from that spot. So we saw the bulls basically defend probabilities. At that point, it was pretty clear that the bulls were looking to try and convert the bears, these guys right here specifically, and liquidate them. So we were looking for that conversion, and it came about here. And then right through here was some struggles where I thought the bulls were being very lazy and troublesome, but it was still bullish. And then going through here, it just took some time, a grind up. We got a second bearish position showing up here, but it didn't make sense for the bears to show up, and you can go through the video and watch how that came to that conclusion while it was happening. But it didn't make sense for the bears to show up, and the bulls were looking to liquidate, and then finally, let me clear all this. Right here, you see how tension curled up. That's what it looks like when an institution gets liquidated out of a position, or they have to unwind across the market, and it brings tension up. And that was right through here. And at that moment, I am under the impression that basically because it's Friday, the whole trade concept was done. So moving from here to about there, there's just not much else to do. We liquidated the bears, so there's nobody else on the backside of the trade. Going into the weekend, I would be amazed if bears decided to pick up another position and hold that into the weekend. It just seems like a bad idea. So that's how things went. Those were the major events. I realize this is a long video, but you can, push through. I live stream. If you see my little picture show up, that's where I was talking and walking through markets and stuff. And I had some other stuff go on. Usually Fridays I have some other things. So there's little breaks where I wasn't walking through markets. But here into the close, now that we got the idea that we wanted, the question is what's going to happen going into next week? Like, what possibilities are there? And that really is all that matters, is what's coming up next. Well, our friends, the bears, I don't think there's a whole lot of motivation for them to try and pick up another liquidity position. So we pushed up here, liquidated them, and now the whole objective, I think, is trying to get bears into the best position possible for next week is what they want. So if we're looking at the bears side, what would they want? Well, if you were a bear and the market looked like this and you had just gotten pushed out and you were clean from your position and you said, now what? I think pretty much what you wanted, you say, well, I'd like to get as high a prices as I can. Whatever I can get up in this area, somewhere in here. I think the spot is about here, where I think the bears are sort of hauled up. So somewhere maybe in this zone, if bears can get another position in that area early next week, or something along those lines, I think would be the best for them. And then try and keep this tension number down. I think bears would love to see somehow they can grab a position here, get the market to come back down, and then when the market opens next week, we see tension maybe down a little bit at the open. So the goal here for the bears is to get a favorable position to try and get an edge on the market going into next week. The problem they're going to run into is that the bulls have not given up anything. They're in a great position. I think they've taken out the bears. So what the bulls are really going to need, I mean, there's an hour left in the day, or early next week, is to see the bulls fail. Until you see the controlling party, really the ones who won, until you see them fail, there's just not really good reason to think that they wouldn't just take you out again. So that's going to be a concern. I mean, trying to get into a bearish position here, if prices moved up into the close and maybe the bears were able to get into a position there and try to do things. The issue is you haven't seen the bulls get out of the way. I don't know why you would think that. So I think if the bulls got sampled into the close, maybe like this, I just don't see that happening because it would be a very drastic move to make that happen. Maybe. And if the bulls didn't pick it up and they failed, then that would be sort of a head nod, say, hey, we got it. We're good. And the bears would probably want to try and run with that. But I think the most reasonable thing for the bears to do is to sit back for a minute here, because they just got taken out of the position. There's not much else to do other than wait for this decay retest. I know it's a little bit, let me move my picture. It's a little bit behind this here, but you kind of see there, decay can get up and test that and give us a multi-day retest. So we retest the high of the previous day or the low of the previous day. Then that could give the bears a risk reduction setup. And those are kind of a position that is useful for somebody who has no other options. And I don't think the bears have many other options right now. So I think that's the most reasonable thing, is to see this lean up, try and see what the bears can get, highest prices they could get. The thing that's going to be tough for the bears right now, letting the market or having the market lean up to give them a sample, even a decay retest, is going to bring tension up higher. It's just going to do it. As the market grinds up, it's going to knock out any lingering positions from in here. Anyone who tried to sell that, they're going to get hit. And it's going to help bring up tension as well. This is going to be across the market. And if tension closes up about here, I mean, the bulls won't have a whole lot of trouble popping this up and doing something like that, where they could trap out these bears. So the bears are in a really difficult situation. Do you let the market go up and the bears are just gaining advantage? I mean, the bears just, what are you going to do? The daily tension's up. If we see this decay retest in the close, doesn't that look like advantageous for the bulls? Because it gets tension positioned, so they could open it next week higher and trap her. I mean, that looks great for bulls. But I'm not sure that the bears have another option here. I'm just not sure that they do. I also don't think they're going to be all that motivated to do much after this and an hour left of the day. Maybe they get crazy with it. So I think this is the most likely thing that's going to happen. See things sort of drift higher. I'm not sure if the bears are going to want to pick up a risk reduction into the weekend with this kind of thing going on. Maybe. So next week, if you're popping open these charts and you're like, well, I got to figure out how to interpret this. The biggest thing that we're going to be watching for is how this plays out. If we close here and it pops up, are the bulls going to take this up? Are the bears going to treat this like a zero test? Kind of like here where the bulls bought that test of zero. Are the bears going to try and sell off a test of zero where it crossed over? Is that what's going to happen? Is tension going to open a little higher and maybe move down? How is this going to get played? Because if the bears have a little bit of edge here that they didn't have this morning, which is 30-minute tensions under or they weren't able to get daily tension, which is just it's too bad for them. So that's kind of a situation where, for me, this looks bullish. It looks like the bulls are going to probably want to drive this up, get those bears into a nice decay retest position. They feel good about it, and then open up things maybe higher next week, or even sideways next week, and then take things a little bit higher and trap out anyone who's lingering. Because I think that this whole situation yesterday on Thursday was just undeserved. So that's going to be that's sort of the target here. Is can we wipe out that undeserved position by the Bears from Thursday? At least that's kind of what I'm thinking in the back of my head. So have I gone too? I think I've gone too far, like out, like laterally. Descriptions. So keep your eye on tension. The further up tension gets, the easier it'll be for bears to get tension over and then pump it next week at the open. If that happens, basically this whole dip just will be a trap, and you're going to hear your buddies saying, I tried to sell, it didn't work. Oh, of course the market's killing me. And you're like, well, it killed all the bears. So that's what I'll be looking at. Or if, where's this going to open at? How's it going to look into the close? I'm not sure that the bears are going to want to do anything to the close. It's just, I think at this point, there's just too much risk. They might want to try and short higher, start building into positions. But right here, I think it's just setting yourself up to get totally jacked next week. So I'm not sure why any bear would think that was a great idea in this current market. So that's where I'm at. You guys have questions? Shoot me questions. I'm trying to get questions. I'm not getting any questions. It's probably because nobody's listening. Is there anybody even there? There's the YouTube chat. You can use the chat. I've got that up. I can see it. Or Discord. So if you have questions, shoot me questions on there. I can go over stuff. Another thing that I think is useful to understand, I know this is a really simple strategy. It's one of my favorites, though, probably because it's so simple, is the inversion. I mean, we saw that work out pretty much just about as good as you could ever want. We got our inversion level. It pushed a little bit higher right there, so we reset it, and then it retested, and then it stayed up. And you see right here when it started to sort of, you could call it a blowout, we got new highs on the tick. See right through here. And that sort of closed or finished up the inversion. And then it looked at reinverting, but it got under, and it just, so it's sort of like the market's going to stagnate from here into the close unless something else can happen. This inversion, I think, actually looked pretty good. In terms of the auction profile, this was, I think last night was it was a tough because, well, I'll show you. So you guys know about the OWIR, which is you get the outside, so it's outside the value area, see? And then you break inside, and you want it to get up to this point of control. So inside, and then retest, and then run, but in this case, it went back outside, retested again. So you had retest 1 and retest 2, and then it hit the point of control, and then it tested the value area low, and then it ran to the other side of it. So it was a little tough because you had a false start right here where it broke in, tested, and then just kept going. So a lot of times when I see that retest, I really like to see it to the tick, and this was a pretty good one. This one came down and sort of pushed straight through. I will wait a second, and then when it gets up to here, I look for maybe something here or on a test back, but right to the tick is just the best. So I like that. So we had an OWIR outside here. We'll call this, well, that's the inside, the retest. So it broke inside. It's very quick to retest. Whoops, sorry. Outside, inside, and then this was the retest, and then it was supposed to run, but it ended up inside again, and then a retest, and then a run. So it was a little sloppy about here, but it was there. Otherwise, in the middle of the day, you could see we came back down, tested the value area low, and that helped really kind of, right that moment where we were looking at the market getting bullish, and I was venting about the bulls being lazy. That was right here. So not too bad. I think it was actually a pretty interesting day. Not much else there other than the standard stuff that you probably already know about. All right, so that's where we're at. I don't think there's a whole lot else to do today. I mean, if we were to set up something new, we'd need to I think reestablish some conflict. And you could see that this morning, which I thought this morning actually established pretty quickly, took quite a while. Hour and a half, and we only have an hour left, so we would need to get some bulls sampled, maybe some bears sampled. I mean, that could take a while, and then we have to get some drama going on. We need to figure out what people want, and to me, this looks like we just sort of wound up and tied up all the loose ends with the bears, and that expecting more drama to set up right now is just I don't think that's reasonable. There's just not enough time to get everybody into the right positions. Something else to note, you could see yesterday at where the Bears were doing their thing. I call it cheating. That there were just little orders here, and then today you could see there was filling most of the day, and then it right here finished. So if price moved up, there's probably a good chance that the portfolio orders would stop filling. Yeah.
That way?
That way. I have got to set a show for a 5-year-old. I'll be back. Okay, I'm back. I got the TV show set up. I have two questions. The first one is the buy and sell orders. RG asked. Um, orders left. Okay, so there's different ways to measure things. Really, there's two options that you have when it comes to like trying to quantify or qualify something. You can either really uh, you can say what shape is this, or you can say how well does this fit a shape. So if you have something and you sort of it made a circle, you could have an algorithm that sort of looks at what it's doing, and then you look at it and say, oh, well, that's a circle. Or you could take a circle and you could sort of get a correlation and say, how close is this thing to a circle? Now, in this instance with the trapped orders, we're doing the second one. We're saying, how close does this fit a previously determined shape? Like, how close is it? So when you see percentages, what you're seeing is a predetermined like concept or shape, and the market is looking at the volume, and it's trying to, well, it's seeing how well it fits to that shape. And as this fits to the shape, you get the signal shown. And then as it plays through the duration of the shape, the known duration of however that shape is, then you get percentages. So you don't see that really in it. It should be 100%, 99, 98, all the way through. But because the market sort of comes in chunks at you, you never see 100%. You see just how well it fits to the shape, and it won't trigger unless it fits to the shape. And then how far along in that shape you are is the percentage. And then as we get to the end of the known shape, you get to zero. So it's the purpose wasn't to say that there was X amount of volume. The purpose was to say, does this volume meet a qualification? And then it wasn't to say there's a big buy or a big sell order. It was to say how much more is there. And so I sacrificed the ability to say there was 1 billion contracts or 1,000 contracts for the ability to say it will last this long. And you can't really say it's going to last for 5 minutes or 2 minutes or 10 minutes, but what you can say is that it's getting done, sort of like converging, and then once it's done, you get that 1% and then it disappears. So the objective was to use pattern techniques to measure a concept so that we could see it happening and then say, if it's 80%, it's probably, got a minute or two before it's done. If it's 5%, you're getting closer. If it's 1%, or if it gets down to like 3% and then it bumps back up to 20%, you get, you could sort of get a sense for like a second wave or something like that. And then the way that this is marked out is it's trying to track, like right here where there's green and then it has this bright green. That's just highlighting the last bar so that you can see where it tried to terminate. It's just a visual thing, so you can kind of see that. So right now you see this, it's sell orders left, we have 6%. What's that saying is it's fitting the pattern. So if there's a circle, maybe it's correlated. This is the data set. This is the shape I wanted. And then this has a lifespan, and it's sort of meeting through that. And it is sort of complicated. It's using patterns to try and predict how long or when something is done, which is a little confusing, but I think it works pretty well. So I understand the confusion, why it's percentages. But it was so I gave up sizes and stuff so that I could time things. Okay, the second question hopefully, does that answer your question, RG? And it's a confusing concept. Okay, so Greg asked, the terrible bear setup mean that there will be a muted reaction to negative news? Throw a wrench, I think. No, So a bear reaction is what happens when you stop them out, in my opinion. That is, you are forced to react. And in this context, what happened was the bulls picked up the market and forced the bears to react. So if you think of it sort of that way, think of it like stopping people out instead of like a reaction is something you do favorable for yourself. That what happened was the bears, they didn't do terrible. And they didn't have a whole great situation this morning. Getting daily tension down and under was going to take prices dipping much deeper than they even came close to doing. They also, the big issue here, the big issue that made this whole situation this morning terrible for the Bears, unless you're talking about over here, and they're both true, is that the Bulls picked this up, and the Bulls picked this up. They didn't get Bulls saying, man, we don't want the market. And so what was happening is you have a controlling party and a submissive party, or a counter party. And the controlling party was the Bulls. How do I know that? Well, right here. Tension's over zero. Daily both were over zero, right to here. And so the controlling party at those moments was the Bulls. And then when tension came down to here, the Bulls picked that up. And so when the Bears came in right here, decay went positive, triggered this, and they tried. The issue they ran into was that they didn't have the Bulls failing. The Bulls were not failures. And the same thing was true for yesterday. The decay went positive right off the open. We had trapped orders right about here. And it's like, where are the Bulls? You need to get buyers to come in. And the buyers didn't really come in until right here. And that volume was happening as it crossed. So you wait for the next bit. It was right there. This is where the Bulls came in. So these Bears, who was losing money yesterday? And how did they know an hour and a half before the rally that it was going to happen? It was cheating all the way through and through. It was stupid. So it sort of irritates me, not because that they do it. I would do it if I could do it. I would totally cheat all day long and make money. But I can't. What irritates me about it is that when you front run a known news event, you insider trade illegally, and you get away with it, it kills off the market. Nobody wanted to play with the Bears. That's why it died. Nobody wanted to play. And today, the Bears were very emboldened. They were like, oh, we won yesterday. And that screwed them over. So it had to do with just the mentality of a cheater who got away with it and made looks like a decent pile of money, and then tried to win. So yesterday it was cheating. Today they thought, oh, because we won, we're going to win again. It was like, well, no, you won yesterday from cheating. Today, you need to cheat again or it's not going to work. And they tried again and it failed. The point was that yesterday was cheap. It was a cheap shot. So do I think it's going to mute a reaction? No. If something happens, it'll likely happen. The thing that's going to be an issue is that I think the Bears are in a weird place where they got this payout, and then today they have had struggles, and they got liquidated, and now they're not in the greatest spot. I mean, it's okay. They have some chance. They have some possibility next week. They do a little bit. They did get 30-minute down, but at what cost? So we could see a downside move just fine. The issue with a downside move is that you're going to run into daily tension hitting zero again. And the Bulls have shown us again and again and again that they're willing to play. But maybe I should have considered, maybe it wasn't laziness that the Bulls had this morning. Maybe it was caution because the Bears were cheating yesterday and they're like, you guys are cheaters. Maybe that's what it was. It looked like laziness to me through here. So I don't think it would mute a downside, but I do think they're going to run into problems. So I would be hard pressed to see the Bears do a downside. And when I say that, I don't talk about spontaneous news. I think that if there's going to be a news event, I'm going to see it in the analysis. Like I'll see it coming. I think. So I think a downside move could be fine. It's just that this is the issue right here. This is the thing that the Bears need to get through. They need to figure out a way to get daily tension down through zero. If they can do that, shoot, if we gap down next week down to here and we have daily tension under zero and 30-minute tension opening lower, they did it. They got it down. That totally fine. It's just that today they got demoralized. They lost control of their position. bulls basically got everything they wanted. They're positioned really well to take things up next week. If news happens, that's the only way I see bears taking this down tomorrow. So that's where we're at. And if you know that news is coming and you think that this is getting set up in a way that would, they could do, that's okay. I can't see, I don't see that. I don't see news. I don't see anybody cheating. I see a bunch of bears who thought they could pull it off fail. So that's my thought on that. So it's not that they really did anything horrible. It's just that it didn't work out in their favor. Hopefully that answers your question about what I think. And that may not be accurate. It may turn out to be wrong, but I don't see that. I see trouble for the Bears currently, unless they can change something dramatic. I mean, they would need something really dramatic to make a difference. RG says in sequence, then you look at reaction and price if you are near a velocity or decay probe. I look for a probe sample. I call it a sample, but yeah, sure, probe. I look for a number. Oops, there's a thing in the way. Let me get rid of that. I look for a number. Anything. It's not even a number. I look for anything that suggests a guaranteed direction. And so when you see velocity go negative, people think negative numbers mean profits downward. And so they click sell because that's wrong. That's not how it works at all. But negative numbers suggest that you should sell. Positive numbers suggest you should buy. Because they're so simple and easy to see, what it does is it facilitates the trust betrayal model, the political model, where you trust that positive numbers mean up and negative numbers mean down, and then you do that and it betrays you, but you continually do it because you trust it so much. It's the amount of trust you have in a data set that allow you to be betrayed continuously and become a liquidity product for your broker to sell to the market for a risk-free profit. As long as you trust that numbers up and numbers down mean up and down, you are a liquidity product. So what we're doing is trying to take advantage of those liquidity products by seeing the signals and information they look at, and then observe them acting on those silly signals. It's silly to think that positive means profits if you buy, negative means profits if you sell. What is not silly is that people think that. So when we see negative decay, so it was positive, right? Everyone's like, oh, it's going to go up. And then it went negative. And when people saw it go negative, they were like, click sell. And we see that here. I have it marked green because I buy against retail sellers. I do not sell with them. So it's green because retail sellers are how you buy into a market. You trick them with an easy to see number, you watch them fill, then you execute your order to take advantage of their silly idea. So we saw that. Then when you see decay went positive, decay's like positive. This is like energy inside of momentum. So we started to see positive energy showing up on momentum, and it was like, ooh. And then we look and it's like, well, there it is. Okay, well, there's the people clicking buy, and you sell against people who think positive energy means if you buy, you make money. And look, they bought the highs. Good job. Normal. Came down. And right here, we saw tension trying to get through zero. They were like, oh my gosh, tension's going through zero. It's over. Everybody sell. And we see them selling right here in response. That's what this green is. It's people who thought that possibility space going negative meant profits were on the downside. So click sell and shut off your brain. And what I did was I said, oh, great, we have people. I don't even think about them because it's just a silly idea. So we have, what happens is that you are not an institution unless you consume liquidity market-wide in all the stocks, all of them, not the ES, not the SPY, all the stocks. You're not an institution unless you consume liquidity market-wide. This volume is market-wide volume. It's crucial that you see the actual actions of retailers knee-jerking to ideas. So we have the first, so right here, to me, this is bullish liquidity. It means that some institution likely filled a bunch of long orders market-wide against a bunch of stock traders who are trying to sell the idea of this or that. And it was momentum going negative. They thought, oh, everybody's going to win. So they filled a bunch of sell orders. Institution came in and consumed all those in a package. And that's bullish liquidity. So right here, again, same thing. So it's sort of it's that if you're the retailer and you see a thing and you buy, you have just become liquidity, and they're going to put you in the box and give you to an institution, and you're going to be on the backside of their trade. So you could see it was the retailers tried to buy. It's red because I sell against retailers. They tried to sell. It's green because I buy against retailers. They tried to buy. It's red because I sell against retailers. They tried to sell. It's green because I buy against retailers. Retailers are dumb. They see a positive number, they go buy like idiots. So they're missing the thing that the market is a business. And the product is you. You're the product. Your liquidity, because institutions don't want you to see them open contracts. If they spike the open interest too quickly, things go crazy. So they need you to open the contracts, then they take them from you and they fill on the back side. So your broker bucket orders a bunch of you, and then he turns around and he hands it. So the open interest never spiked. And so good institutions don't fill more than the open interest that's available. Otherwise, price. So what happens is as soon as you're done filling that, you see price go boop. So that's why I'm always looking for price sweeps, because that means that they got done filling and that money they actually deposited, where you're depositing margin, which is debt and worthless, has no power to move markets. You're depositing margin, they deposit actual cash equity. And so it hits the market. The ES calculates the fact that they just deposited a whole bunch of money into their debit account, and it goes and sweeps up. You can only sweep the market up if you deposit with equity. Otherwise, if you deposit with market, it just grinds to your stop. So you need to trade in the same direction as a large institution with equity, because you have no power whatsoever to move price favorably for yourself. None. Your broker saturates your position with so much margin, it's not even funny. You probably get $100 of equity in there, and do you have any? The ES is $13,000. $100 of that's equity. The rest is all debt. Your trade folds so quick, it's not even, so you need to get in before an institution so that they can actually put $13,000 a contract in and push price. That way, that $13,000 is what's transferring into your account. So when you're looking to buy with the bulls, what you're saying is, I think the bullish traders are going to start depositing equity into the market because they have power to move the price. I have power to destroy myself. So you have to front run an institution or you're screwed. It just doesn't work any other way. But I don't care who you are. You're either front running institutions or you're just a account that pays out to the broker, and they probably don't even fill your orders through because you're clearly not informed. They call you an uninformed trader, not a retailer. So this is a big deal. Like, how this works is important because you need to know how they think so that you can get ahead of them and take advantage of the money that they're depositing with these huge pension funds and stuff like that. And it's a lot of money. It will pay you, but if you're not ahead of them and understand what they're thinking, your order just gets stopped out. Really what it is if you buy and somebody else sells, then whoever has the most margin is the one who loses. So it ends up being that the power is with the brokers. They get to decide who has the more margin, and that decides which way the market goes. That's how the market makers down on this floor control price, is they determine the flow of margin, debt. If the buyers have more margin than the sellers, price declines. It has nothing to do with demand. It is not how many volumes you fill. It's about debt. Debt will ruin you. And so they just change the debt flow. We'll give debt to buyers, give debt to sellers. Unless you're an institution, in which case they're like, oh, we can't add debt to a equity position, and that position can actually do work. So what we're doing is looking for retailers who inherently have debt saturated on their position. And we're trying to front run institutions who are filling the backside of them. So that's what we're looking for. We need little signals for those bugs to, they see them like a light in the dark, and then the bugs come. Like you show, negative number, and they're like, negative number, zzz, and they just die. And so we're just trying to get like thousands of little bugs. That's what these retail That's what these retailers are. And then the institution buys, they dump equity in there, all the margin from the retailer goes, pulls it up. And then what happens is we stop paying attention to retailers entirely. And you start looking at institutions. So people who consume liquidity, if you can understand what that means now. We're looking for bears who consume liquidity and bulls who consume liquidity. And then we're trying to get into their heads as they fight each other to see who's winning socially, not numbers. So we don't look at numbers. We're not looking for buy signals. We're not looking for sell signals. We're looking to see where the bulls are, see where the bears are. What are they thinking? How's this working out? What's the possibilities here? And then it just becomes clear. You're like, these bears suck. They're doing terribly. And that's what happened today. It was like the bears are trying, but for them to take out daily tension is going to take a massive move. And they already cheated yesterday. They're not doing it again. And then when the bulls defended possibility space, they stepped in and said, we'll consume liquidity, inject capital so that you can't own the probabilities on the daily time frame. It was done. So we're looking at how these institutions fight over the future of the market, not the present. Nobody cares about the present. Nobody worth their grit gives a dang about what price is right now. They care about what it's going to be tomorrow and next week and how this is going to close. That's all they think. They don't go, oh my gosh, it's at 29.42. They go, oh my goodness, possibilities, like the probabilities here are leaning in this direction. And that means next week. They trade next week. I mean, they're like basically in the future. It's really hard to compete with them because most traders sit in the present and they say, trade what's on your chart. And I say, trade what's on your chart tomorrow. Don't trade today, trade tomorrow. Look at how this is going into the close and tomorrow, and you'll do way better. That institutions don't care about today. They don't. Any more than when you're at work that you care about what you're doing right now. You're sitting there doing whatever your work is, thinking about how it's going to close and dinner tonight. You don't think about the present, you're in the future. And so if traders are constantly stuck in, what does my chart say now? You're in the wrong time zone. You need to move 3 or 4 or 5 hours into the future, and then you can go, oh my gosh, they're doing this. So that's how we operate. You're looking at these institutional positions. You're looking at possibility space, which is tension, to model what they're seeing in the future so that we can say what motivates you. And if you can predict when an institution is going to put their pedal to the metal, you will make a ton of money. You can fill as many contracts as you want because they fill in the millions market-wide. So we're not looking for signals. We're looking into the future to see what's happening, and we're looking at the social dynamic between big, important, very big, deep pocket people. So buyers, they defended possibility. They manipulated the possibility space on a daily time. They said the probabilities here on a daily time frame are going to go negative. Let's inject enough money to change that. Good luck. Go do it with your trading account. Let me know when you're going to do it so I can watch as price just goes the other way. You don't have enough money. You need hundreds of millions to do that. It's so much money. These are big accounts. They're pensions for states. They're funds like Morgan Stanley. That's who these people are. So we're not looking for little fish. We're looking for the biggest fish on the planet. And we're going to try and get in front of them based on the dynamic and the fight that they're having with each other, which is natural. And then we're going to try and take advantage of that in terms of narrative. We're going to say it makes more sense for you to do this than that. And that's what we look for. There's no money management. There's no stop loss requirements. There's no A, B, C, D, and then you trade. There's no buy signals. There's no sell. I don't do that. It's silly. It never worked for me. Never has. And I've never really met anyone who actually has any success doing that. It's trying to get in the head of those institutions, front run them and force them to pay you. Because if they lose, you lose. If you win, they win. You need to be there. So we're using that retail thing to see how that they're grabbing their orders by consuming that liquidity. And then we ignore that completely and we look at how they're fighting each other and how their emotional states are shifting through the day. And then you say, you just lost, you're winning, you're confident, you're going to hit this, you're not, I don't think you're going to show up. We start making predictions that are accurate about behavior. You can predict their behavior, you can have their money. And that's how it works. So how did we pick a low today? wasn't a signal. It was because the Bulls were doing better. The Bears just suck. I never really liked Bears anyway. I think they're terrible traders, but that's just because I don't like them. I know a lot of people who like the way that the Bears trade, and that's fine if it works for them. But I don't really like the mentality of the Bears. So you have to get it's sort of a big complicated thing, but it's all built on liquidity, samples, and how that relates to tension, which is tension up here, and how that they're looking at this and why they're doing things, and then you build expectations. You say, if bulls are here, then this is happening. If bears, and then you do the scientific method. You expect, and then you see what the data says. If you're right or wrong, is it validating or not? And if it's not, reevaluate. And then eventually, every day, you get to the point where it's like validated, and you have grabbed onto the correct narrative. And you continue to check. You never turn your brain off. And then you take advantage of making bets based on the most validated narrative that has enough conflict to pay you. Today, why did it rise? It didn't rise. It rose because they deposited some equity, but these bears right here, or these ones right here, they got liquidated. Their position went upside down. They had to unwind the entire position market wide, and you can see that. Look at this. Their position, when they unwound that short position from this morning, it put a 90-degree turn on the New York Stock Exchange probabilities on a 30-minute. A 90, that must have sucked. So we were looking for bulls dominating the bears, and they do that very craftily. They're careful. They manipulate your emotions. They convert you into an apathetic trader. Then they grind against you, and they try and push you, get you to move your stop as far as they can before, you get liquidated. I think the bears kind of knew it was coming anyway. They were being a little cocky this morning. So they didn't hold on nearly as long as I think that maybe I would hope. But we can see they dumped. You could see it clear as day right here. Easy. And you're like, oh, so anytime this moves up, that means someone liquidated. It's because this social situation here let us know that bears were trapped. And so you remember that in what was that? Sherlock Holmes with Robert Downey Jr. And at the very beginning, they're in there fighting those weird evil guys with some girl on the table, and they're doing something demonic. And the supporting character goes running up to the guy, and he's gonna like hit him or something, and then Sherlock Holmes stops him, and there's a piece of glass sticking out of the guy's chest. He's like, how'd you see that? He says, because I was looking for it. And this is exactly that. You can't see things you're not looking for. You should never say, oh, there it is, I'm so surprised. You should say, I wasn't looking for that. It's not important. What's important is what you are looking for. This turn in tension, sure, it's neat, happens all the time. Here's something there. It's significant because we were looking for it under the context. And as soon as it happened, we knew what that meant. It was clear. And then the market sort of died off as the bears fell apart. They were like, we screwed it up. And I'm just like, oh, okay. So that's what's important. It's that you're looking for it. I think that it's hard to sort of really talk about exactly how layered the methodology is, but in the end, what happens, the whole goal is for a trader to say, I understand what's going on in front of me. That's it. It's not to give you trades or entries. I mean, there's things you could possibly do, but the objective is so that you can actually say, I understand what happened. I get it. Every single day you come in, oh, I see what happened. I get it. And as it's unfolding in real time, not after the fact. This is a system that lets you know what's going on and what will be going on over the next hour or two in real time. Not, hey, look, this history, I don't care. I don't even back test stuff because I think back testing's silly. It's wasting your time staring at your own butt. It's in the past. Leave it there. There's nothing for you in the past. Everything is in the future, all of it. If you're spending time with your head in the past, too much time, especially, you're faced the wrong direction. In fact, you're faced the wrong direction unless I'm trading against you, in which case you're a retailer, in which you're faced the right direction. You're actually faced the direction that benefits me. Because I want to trade against people who are focused on the past, focused on things like high statistics and money management and, you know, the stuff that doesn't work. They provide liquidity and they make it possible for me to take advantage of it. So, I mean, I've done my due diligence to make sure that things are proper and stuff like that, but I don't think the past matters nearly as much. I mean, the markets are supposed to be stochastic, right? Stochastic means that all previous data sets are accurately represented in the current data point and that there is nothing for you in the past. And that's the definition of stochastic. So I kind of think that way. I think that measuring random data sets from the past will not help you predict random data sets in the future. That's just not how stochastics work. It's sort of a tough component, and I get that. It takes a while, but it's important, and it just says this is imperative. You need to do it in real time. So looking back at the chart can help you kind of see the spots and stuff like that. But even now, the excitement of the emotions and the drama and really the narrative is even to me dull. Like, because it's in the past. I don't care. It's like hearing about some weirdo's relationship with some other weirdo that you don't care about. You're like, that's great. You just don't care. It's over. But in real time, boy, you'll tune in for the drama. So real time is important because you get these things that you cannot access historically. And that is a fundamental feature of good trading. You cannot get the data historically. There is a component that is completely missing, and it's called real time. And so I don't think historical data is nearly as effective as markets try to let you know. How every broker wants to tell you about how you can backtest. There's a reason that they tell you that. It's because it's stochastic data. It's stochastic. The definition is that backtesting does you absolutely no good. That's the point of stochastic data. Now, obviously, I use historical data, but the point is that your focus should be what the players are, their social relationship, and the future. You shouldn't be looking at the past. If you're sitting there going, oh, there's a level here and a level here and a level there, sure, maybe they work, maybe they don't. You know, it'll bounce and then break and then not break and then re-break and break again and break further and then rebound. It'll just be up and down. The point is, you say, it's more important to say, I know that these traders are looking for something. And then you say, well, here's a level right here. If they're looking for something, but you're predicting a behavior, you're predicting that. There's no point in a support and resistance if you can't predict that somebody wants to use it. Oh, the Tiger King drama. Tiger King drama is the best. It's just like stupid, but it's so, the stupidity is just so great. And I think trading's like that. It's like, while you're going through, it's great. I'm sure humanity's going to look back in like 2 years and say, that was so dumb. But in real time, it was epic. Super epic. So I think traders like this. So what you should do is come back and review today's stuff. Come back, and then next week, the goal is to try and listen for the narrative. You need to learn to think in terms of the future and in terms of what the players are doing and what they want in the future. What's happening now has lost its power. A rally that's shot straight through the roof is no longer a rally. It's over. Once the rally's there, it's not a rally. It's done. You shouldn't buy it. You need to rally before the rally. So you should always be looking in the future. Oh, never looking. I almost never scroll back on my charts. I do occasionally, usually it's for a decay retest, but for the most part, if you have to turn around and look at the past, you have just pointed your face in the wrong direction, because there are no profits in the past. They are all in the future. And once you have a profit, it's no longer profits. It's a new position, and if you don't cover, you lose your profits. There's no profits in the past. So that's my spiel on that. It's a lot of philosophy, but it's worth your time. Absolutely worth your time. If you can get it. Okay, so that was a rant. You guys got a rant about liquidity and how to look at markets. So far right now, it looks like the market leaned back down to where the bears just did nothing right here. So I'll mark that. I don't see a decay retest. I don't see bearish liquidity. This to me looks like the bears got liquidated. The bulls likely took profits, and it leaned us back down to where those bears are at. And I think my anticipation is the last 15 minutes or so, the market should just kind of go sideways. I don't like the idea of trying to stimulate anything. I think that up makes more sense because if the bears want to get back in, they're going to want high prices. The bulls would like higher prices. So everybody's sort of on the same page here. I don't think there's a really good case for down into the close. But I also think that driving the market up a bunch means you need to trap a couple people. So a nice dip here. I'm not sure that I would call this liquidity whatsoever, but I don't think this down makes sense. So, up into the close, maybe push a new high in the last 15 minutes or so would make significantly more sense to me right now than trying to close here or lower. This just doesn't seem to work. You missed a rant. So we'll see. The reason I say we'll see is because I think that the trade is done. I think the trade finished up once we liquidated the bears. There really wasn't a whole lot of case to say, I'm going to hold on for more. I don't think that makes sense. So I say we'll see because I'm in data collection mode. I'm watching the participants, looking at how things react, and looking at the tension number here, right here, and saying, next week when this opens, could this open higher? Could this open lower? Could this open flat? How about here? Would this shoot up? Maybe a zero test. Would it be like this, or maybe a late zero test, or down? You start modeling all the possibilities, and then you sort of filter it out to two basic ideas, in my opinion, which is the bulls gap it up and trap out everyone here, or the market maybe opens here and the bears try to keep this down. Maybe we open just flat like that, and then it comes down a little bit. We move up, and the bears try desperately to defend zero test and establish their dominance in the market. If they can do it, that would be. So either case, I just don't see down in the cards. It's not. This whole downward move is silly. So up makes more sense to me in this context into the close. Next week should be some fun because I think the bulls are getting back in the saddle and they're going to have some kick and some fight. And I think they got a bone to pick with the bears Thursday, and it should be fun. Oh yeah, well, let's squeeze them. Let's squeeze them, Jim. Let's squeeze them. I don't think the bears are done by any means, just done today. I'm not saying the market's going to crash or anything. It's going to shoot through the roof. I'm looking at those possibilities to try and get those in my head so I can understand the behaviors here. And it's like, well, moving down didn't really make sense in today's close. If bears want to get in, they need a higher. Bears like to sell high, not low. So they need a position to sell from. And I think it's sort of interesting because pushing up, and maybe you guys notice this, pushing up is going to start. I think there's a little section of we cheated and we're so happy right here. Like they own these prices or something. But pushing up into the close to try and find some bearish positions, really going to kind of open the opportunity door for bulls to be like, hey, that position, let's see if we can just, take it back. And that, that's going to be next week. We'll have to see. But currently, pushing things higher to get sellers in. So there's some motivation for bears to be like, I don't know if we want it to come up. I'm not sure. So I'm not sure there's much they can do about it, though. Bears got wrecked. They, like Jim said, they got wrecked. So no good reason for down, just up, up, up. Everybody's on the same page. I mean, if those bears from yesterday decide they're scared, they can buy out. If the bears want to re-enter the market, they can push the prices up. If bulls want to make some more money, up. Everybody's in the same direction. Nobody's face down except for all those people underwater. So Jim says, a couple more people to squeeze. Let's squeeze them. Let's ruin their weekend, right? I can't take a loss. I'll be pissed off at my family all weekend. That's what people think. I'm gonna hold on because I'll make money. And it's like, we're gonna ruin your weekend. You're gonna sit across the dinner table for Sunday dinner and look at your family members and know that you suck. And that's gonna ruin your weekend. At least that's the way I think of it. That's what I imagine. Squeezing people into the weekend's a real profitable thing to do because people's risk tolerance is just through the roof. You don't want to look into your family's eyes over dinner and say, I suck. So you'll probably lie to them anyway, since you're a terrible trader. That's what people do. I'd love that. I think we're primed. But we got this Bears. We gap this up tomorrow. It's done. It's done. But if Bears hold on to that cheap footing they got the other day, and they can keep tension down, I don't know. I think it's gonna play out Monday. I think Monday it's gonna be pretty clear, pretty quick. Which way? It's hard to say. Shoot down, shoot up. Just shoot. I'm just here for the drama. Tuesday. I keep forgetting Tuesday. It's Martin Luther King. No, Memorial Day. Memorial Day. So yeah, Monday's Memorial Day. Monday. So long weekend. Boy, no wonder. Yeah, nobody wants to hold into a 3-day weekend. That's an extra day for somebody to pay the news to say something stupid, or for somebody to just say something stupid. Oh, look at that. Look at that. So, okay, so we can see we're getting about 10%. Look at that, 10%. Why is it 10%? Why is it positive here, negative here? Because this is the downward force it took, and the counter force pushing back up is this. There's 10% counter force pushing up. It is a positive force. It works like buoyancy. So as you push down, buoyancy pushes back up. So it's green. And the daily tension is red because that's the downward force on the market. So if you think about prices rising when there's downward force, it sort of tells you about what's going on. But mostly the objective is just to get control by pushing things over the zero line. Oh, come on. You got 9 minutes. We can squeeze a few folks. Squeeze a few folks. In 9 minutes, you can squeeze a bunch of folks in 9 minutes. And you don't even have to catch the coronas from them, because it's the internet. So yeah, I don't see anything that's even possible. Like, we're not going to get into the closed sample by decay or velocity. That's not going to happen. There's no real opportunities here. And the Bears, what are they? Decay retest into the close? Ooh. I'm going to pull up the VIX. Let's take a look at the VIX together. All right, so I use, let's see. Get rid of my face. Here's the VIX right here. This is a pattern recognition thing. Again, it's a pattern thing. So I look at a little longer term, so I guess I can't see the coil. Big move coming into the close, maybe. Let's squeeze them. Yeah, I think the big move really is oil. It's like everybody's making fun of people because it's like, buy, it's negative. And they're like, that's silly. And I'm like, that's not silly. Oh, and 30 days. Well, I'll be here. Let's do this. 30 days. Make some money. If it's up, I'm just going to laugh. I mean, not that I want it to be down or anything. It's just people think that markets are some sort of representation of truth or reality. And it's like, oh, that don't make no sense. It's just money, just a bunch of money. Okay. Yeah, probably. Well, yeah, of course. Of course. It should be good. I think yeah. I mean, we'll see. My scope I try to keep a little closer to me, like a day or two, but nothing. Bring it on. I mean, I think that. Well, I think we still need to see like a AAA setup get just toasted by one side or the other. We really haven't seen that yet. We've just seen one side try to control the other side. We need to see somebody be like, "Oh yeah, AAA setup," and it just doesn't work, and they just get blown out in such a big way. I think that's probably how it's going to start. That's just my hypothesis, but I'm kind of thinking that would be how it'd start if we get something coming up. We'll see it. We'll see it in real time. You talking about the stat ADI? I got it just floating around there, 0-ish, trying to make its way up. Oh, it has. Oh, you looking at like how it's kind of, yeah, yeah. And I was looking at the best fit vectors. They've just green, 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 green. Like, not even a chance. They're just not doing well. They just had that one day where they like cheated, and then it was just, and then they sucked. It's like, good job, guys. You can only win if you cheat. Otherwise, thanks for paying. Yeah. I'd love to see it just shoot up Tuesday. Trap out the bears, and then see if we can set up a bearish sell position that just falls apart, doesn't work, and then the bulls just go to town. I would love to see that over the next week or two, but that's a little far out for me. I'll rely on you for those. Oh, really? I'm still not super good with that chart. Yeah, there's a lot of, I don't understand. Like, I mean, I do understand. I get it. I listen. I got family members. They let me know where the ideas come from. Yes, Pierce? Is this show boring? It looks super boring. Come on, we could get a squeeze up here. Problem. I mean, everybody wants the same thing. We all want the same thing, okay? Nobody wants down. Everybody wants up. Come on. In fact, man, I would just love to see a squeeze that gets us up to that point right here. I think this is just the spot for those bears to be like, this is mine, right here. So we can get right up there. Oh yeah, I'd just be happy because that would just be a stick in their craw, and they'd be like, oh, going into the weekend with the bulls just right on your tail. Oh, after getting your position wiped out, you just come on, let's shoot it up into the close and then say, enjoy your 3-day weekend while the bulls take some profits. Maybe put some options on there and say, you guys are going down. It's just, I would love that. I think it would be just perfect. Work out just great. There we go. Let's get it. Let's get that spot. They don't deserve it. They didn't earn it right. They earned it wrong. Cheating ain't no way to do it. Come on, go up. This is blast off. You got 2 minutes. Well, I guess you got 2 minutes plus whatever after for a couple minutes. You didn't earn it. Oh, and look at that. The portfolio orders. Yes, Pierce? Oh, look, it's working. Is that funny? So the portfolio orders finished up right here. See that? Price started to move up. They stopped filling. That I look at these guys, you'll have to fill all the way down, and then when they finish filling, that's a good equity deposit. They're a little bit broader group of people. It's just a model, but you can see they finished up there. Come on, go hit that little spot and just leave those bears in just the worst mood. Worst 3-day weekend mood. That's just exactly how you want to leave them. That's how I want to leave. Let's see here. All right, there. We'll get this. We'll put this right on it. There we go. See if we can get there. See if we can get there. Come on, just a couple more. Eight more. Love it. Well, that is about it. If you were able to pick up a bullish position today off the analysis, great. If you were able to follow along and it was useful, even better. The objective here is to get you autonomous so that you don't need me and that you contradict me in good, useful ways. It's not useful for me to spout off nonsense and keep everybody in stupid land so that you pay me or something dumb. You need to learn how to do this on your own. Get off my back about it. So independence is the only way to successfully trade. If you can't do it on your own independently, you'll never make it. So I hope this was useful. It should stay up on YouTube. It's kind of long, but maybe you flip through to the best parts if you've forgotten how we came to conclusions or something. And hopefully it's a useful tool. Yeah, it's not. 52, just a little bit more. Like, we're not going to leave the bears in the worst mood ever. Okay, maybe I'll bring it down to the expansion bar. So you see how price expand? Oh, you can't see that here. You can see price expanded down right there. So you mark right where that expansion started. It's a good spot to mark, and that puts us at 56.50. I'll be happy at 56.50. Then I'll say, you've ruined the bears' day for the weekend. They're going to be miserable. That'll get you that expansion bar target right there. It'll ruin their weekend. I'll be happy. Bulls got a good position. They're looking happy. So yeah, it's recording. Maybe it'll be on YouTube. I think I put that it'll stay on YouTube. So it should be up there. You can flip through it. It's going to be the whole day of market. Maybe I'll edit it, but I'm not sure that that'll be useful. I think it would be misleading, to be honest. Come on, 53, almost there. I'll take 56. You get to 56, that's the expansion bar. You go further, I'm happier. But 56, I think, will put them in a bad mood, and then I will shut this down, eat some food. Yeah, it'll be a blast. You'll have a good time. 53.50. Come on, a little more. Now, the reason I'm rooting for this is because if you remember, Thursday, the Bears cheated. They got this whole chunk of price. They came in, hour and a half early, and it's like, you can't tell me this. How did you know? They didn't trap in any buyers. They had nobody on the other side. They just got in willy-nilly and sat there for an hour and a half, and then happened to know the market was going to sweep down off some news or something like that. They cheated. And the bottom of the little section they got there is about where we marked it there, 29.56. I think 29.60 would really just be the worst, but 29.56 is about the expansion bar out of the. So I think that putting price right at the bottom of that little section where they cheated, just stress them out all weekend. They deserve every minute. But I don't like it when people cheat, and I can't cheat too. Like, you gotta let me cheat too, otherwise I'm mad about it. Otherwise I start saying things like, "Oh, it's not fair," unless I can do it. I would cheat if I could, because then I make money. 53, come on, up to 56. Oh, you can do it. I just think it'd be perfect. It's just like a bow, like a ribbon on a on a present. Well, markets are closed. Numbers aren't going to move. So hopefully it gets up there. That was the market today. It was, I think, a really good day. I had a good time. I'm going to try and do these more often. I'm gonna, throughout the week, I'll post on Twitter. I'll tell you, Andy, when I'm gonna post. So we'll walk through it and have a good time, and everybody just destroy the market, please. All right, I'm done on here. I'm gonna get some food. I'll see you guys next week. If you have questions about stuff, maybe you're like, oh, I don't ask because people will look down on me because I ask a question. I get it. Okay, shoot me a message and I'll try and get back to you as soon as I can. Answer your questions and stuff. Let's do it. See you guys later.